Welcome to the European market open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London, and here are your top stories. China's manufacturing slump deepens in May, further denting the nation's recovery. Global stocks and commodities sell off. Goldman Sachs is said to be weighing a third round of job cuts in less than a year, plus the U.S. House plans to vote on the debt ceiling bill today after clearing a key procedural hurdle. JP Chase Chief Executive Officer Jamie Dimon tells Bloomberg he's hopeful it will pass. Now, let's take a look at the futures. Of course, a lot of the focus is, of course, what's happening in China. China's economic mire is really reverberating across the board. It's not only hurting domestic markets, but actually putting a dampener and question marks over some of the developed markets as well. Now, contracts for the S&P 500 and Euro Stoxx 50, you can see dropping. Futures down 0.8%, but markets just stabilizing as they're opening. So the worry, I guess, what underscores all of the concern about the recovery in the world's second largest economy means that it could hurt commodities, it could hurt, for example, some of the luxury goods, and so we are seeing the spread across the board. Now, equity indices just opening. The IBEX over in Spain down 0.8%. The FTSE is still quite energy rich, so this is a bit of a different composition when you look at the index. The FTSE down some 0.4%. If you look at some of the other things we're watching, oil, for example, you can see this is gas oil. We can also look at Brent crude at 73.35. Oil holding on to its biggest decline in about 4 weeks, partly on sign of softer demand from economies, including China, including some sufficiently supply ahead of the upcoming OPEC Plus meeting. Remember, that's next week, June the 4th. Tomorrow, incredibly, is already June the 1st. So let's also look at what's happening with treasuries. Again, we heard Mr. McCarthy, Kevin McCarthy, the House leader, really coming under fire from certain Republicans, but we now have a deal on the debt ceiling, and that will go through the first vote later this evening in the House. S&P futures down 0.3%, crude oil 73.35, and then treasuries pretty much stable actually at the moment. The Bloomberg US dollar index 1247. We're also getting some GDP out of Turkey. Again, Turkey just gone through an election. Really what markets want to know is the composition of the new cabinet and whether President Erdogan chooses to change his economic thinking when it comes to lira. The Turkish first quarter GDP rising 4% year on year. Estimated was a 3.5% increase. Again, it's not really moving Turkish lira because a lot of the focus for this currency will be on what they'll do next in terms of composition of the cabinet and, of course, what the central bank will do. Now, the debt limit deal struck by President Joe Biden and Speaker Kevin McCarthy heading towards a vote in the House. That's after it cleared a crucial procedural hurdle with just days remaining to avoid a default. JP Chase Chief Executive Jamie Dimon spoke to us exclusively at the bank's annual Global China Summit in Shanghai.
So I wish that one day we get rid of the whole debt ceiling thing, but I understand when, it's a democracy, people have different opinions about what we should be doing, and it's just one tool for one party to get the other party to the table. So I'm quite optimistic there, and I really do applaud the fact that they all sat down, spoke, got something done.
Now on the debt deal, let's get more with Bloomberg's Bill Ferries. Bill, we have a deal. I think there's a first vote in the House. Will it get through?
Well, I think Kevin McCarthy is scheduling that vote, and he has the support of the Democratic leader. I think they're confident that they will get it through. I think the big question is going to be, how much support do they have? Is McCarthy able, for instance, to get a majority of the House Republicans to go alongside? If not, he'll need a big number of Democrats to go with it. That's really more about internal U.S. politics and congressional politics. I think the end result is they are going to get this through at some point, probably Wednesday night in the U.S., and then they will rush it over to the Senate, where that debate will take likely a little bit longer because just one senator can kind of gum up the process and slow things down. Again, Monday is the deadline, so they don't have a lot of wiggle room here.
Yeah, a couple of Republican representatives basically banged Kevin McCarthy for giving too much away. Is his job at risk?
Well, it's at risk in the sense that, you know, it took 15 rounds of voting for him to get that job. And one of the things he agreed to was that a single member could call for his dismissal. The problem Republicans really have is that they would have to replace him with someone. And after those 15 rounds of voting earlier this year, there was no other viable candidate. So unless someone else steps up to take that on, and that hasn't happened yet, Kevin McCarthy is probably fairly confident that he's going to get through this. I think, I think a lot of Republicans will be looking to see how the coming months and the next year go. And if there's other votes that they are really upset about, there might be more of a critical mass. But I think at this point, listen, McCarthy is scheduling the vote. I think he's confident he'll get through it without losing that position.
All right, Bill, thank you so much. Bloomberg's Bill Ferry's there with the very latest on the vote. Now, joining us now is Nanette Heschler-Feiderib, EMEA Chief Investment Officer and Global Head of Economics and Research at Credit Suisse. Nanette, as always, thank you for joining us. To sign the deal or not to sign the deal, markets seem pretty cool that we will get some kind of, debt deal. Are you so confident?
There's always a surprise possible, and I think at the moment the geopolitical context does, however, give a good confidence to markets that eventually the political parties can overcome some of their domestic differences and focus on what is important from a more global perspective.
So, Nanette, how do you play it? Does it move dollar? Does it change anything with T-bills, or is it pretty much priced in at this point?
I think it is broadly priced in. At the moment, what I would really think is moving treasury yields as well as money markets is what central banks are going to do next, is how they are going to react to some of the inflation numbers that are coming around. This is really what is going eventually to move yields one way or the other.
So, Nanette, where do you buy on the curve? I don't know whether you're extremely interested in treasuries, and if so, what looks like attractive right now?
I think that it makes a lot of sense for investors to look in US dollars to duration. And whenever yields are backing up, this is a good opportunity to fix some of those attractive yields when you think about investment grade corporates as a good alternative that is giving a bit of spread over and above treasuries. I think it's a good moment to think about that, because don't forget, we are looking towards all these cumulative increases of interest rates by central banks to cool the economy. The economy has been resilient in the first half, but that is going to slow really quite significantly in the second half. And for that, and for the outlook in 2024, it makes sense for people to lock in some of those yields. At the same time, we have to say that money market rates are attractive. Consider that from a risk-reward perspective. Compare that to more risky investment propositions like those that we're seeing in equities. And then I think that also having a good exposure to liquidity makes a lot of sense.
Nanette, I like your Super Trends 2023. You call it Investing Reimagined. What do you think will change this year compared to last year?
Look, I think it's been really difficult for investors to make up their minds what to pick. Let's be clear, the equity rally since the beginning of the year has really been driven by a narrow amount of stocks, as well as very key sectors. Technology, communication, that has been really the key driver. And so unless investors had chosen that, then they would not really have benefited so much. So when we speak about the super trends, it is really to transcend that very difficult picking and to make sure that we build our investment proposition on trends that everybody can understand, that we can all see around us. These are societal trends. Let me just evoke some of them. It is population aging. It is also infrastructure. It is climate change indeed. And then really decline what it means in terms of sectors and companies that are benefiting from these very strong underlying trends. This is providing diversification. This is providing also resilience in terms of earnings looking forward. And that is how we reimagine investing.
So, Nanette, how do you play China right now? I know that there's a bit of concern today in the markets about what kind of Chinese economy we'll be left with. We also spoke to Jamie Dimon, who believes that there's no decoupling from China, but the situation is far more complex.
I think there is a little bit of decoupling. I mean, if we look at what is the prospects for China in terms of real GDP growth, that is looking much more solid than what we are seeing in some of the big economies of the West. I mean, think about 5% or more in terms of real GDP growth. That is a good number. However, what is, I think, new in the way China is rebounding is that it is predominantly a services-led rebound, not so much a manufacturing rebound. And that is really going to mean very different things. If you are, for example, looking at materials, if you are looking at the whole industrial production investor cycle, it's going to be weaker because on China's recovery side, it is really the services that are really leading the recovery. I think this is new. I think this is likely to also lead to differentiated outcomes in terms of sectors and equities, in terms of the outlook for companies. Europe, that is really more geared towards some of these industrial production cycles. Think of the German equity market, for example, is going, of course, then to feel it a little bit more negatively. Then if you think about a market like the French equity market, where there is more exposure to some of the services, then I think there is going to be more resilience.
Thank you so much. Nanette Heschler-Feider from Credit Suisse stays with us, and we'll talk a lot more about some of the inflation figures in Europe and, of course, what the ECB does next. Coming up, inflation in France slowed more than expected. Will it help the ECB doves and their call for a pause in interest rate hikes? We'll discuss that next, and this is Bloomberg.
Person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back to the Open, everyone. 13 minutes into the European trading day. A big day, actually, across the board with a bit of pressure on the DAX, down some 0.8%. The focus firmly on Chinese economic data and the fact that if you look at the stock slump, look, there's a lot of worries on what kind of economy we'll be left with in China. CAC 40 down 0.8%. Now, French inflation eased more than expected, reaching its lowest level in a year. Along with the soft CPI print from Spain yesterday, the reading is a boost for ECB doves. Now, with us again, Nanette Hechler-Feiderb, EMEA Chief Investment Officer and Global Head of Economics and Research at Credit Suisse. Nanette, thank you for sticking around. When you look at the energy complex for Europe, but also some of the inflation prints, are you confident that the ECB will manage the economy well?
I mean, central banks are challenged at this moment, Francine, because one thing is to have the volatile headline inflation come down, and another is what core inflation is doing. So I think the central banks are going to remain on their guard in terms of backing off too early from their current course. I think they will be looking very attentively to what the labor market continues to do, in particular with wage inflation, and also how rents inflation, the housing market, is going to evolve before thinking about changing any course. So for the ECB, I think at the moment we ought to be expecting still some increase of interest rates ahead.
But Nanette, when you look at French inflation, when you look at Spanish inflation, what's the chance that actually inflation comes back down as quickly as it went up?
As I said, headline inflation has components that are volatile. So food inflation, for example, energy inflation, these are volatile components. They can bring headline inflation down really quite quickly. But I think 2023 is a very different story than last year. Last year, everybody was worried about the level of inflation. You know, when you are sitting in Europe and experiencing 10% headline inflation, this is something that probably most people would have forgotten in their lifetimes, not be accustomed to. However, what we are having now is sticky inflation. Inflation rates have come down. That's good news. It's a good start. But inflation is also showing some signs of entrenchment. And I think this is where the central banks are going to continue giving their attention, making sure that entrenched inflation is getting combated.
Nanette, I know you laid out beautifully some of the main themes that you want to be invested in, which is an aging population, technology, climate change. But is there anything specifically in terms of industries that you like in Europe because of their exposures elsewhere, but also maybe the savoir-faire of Europeans?
Yeah, I think in terms of sectors at the moment, because we are looking at quality, because we are looking at resilience, we would highlight that utilities is a sector that brings some defensive qualities, especially if we think interest rates by central banks are going to stay for a while around these terminal rates. In Europe, although it's not part of the EU equity complex, we do see some value for the same reasons of the defensiveness of the quality, also of the sector composition in the Swiss market. I think in terms of regions, there is also good value to be seen in some emerging markets, for example, in Latin America. And in general, I think that diversification, but built around high conviction themes, is a very good way to approach equity markets as this mature stage of equity rallies, you know, that has accumulated over so many years.
Nanette, thank you so much. Nanette Heschler-Feiderb, EMEA Chief Investment Officer and Global Head of Economics and Research at Credit Suisse. Coming up, more job cuts on Wall Street as deal-making volumes slump. This time, Goldman Sachs will bring you the details. That's coming up shortly, and this is Bloomberg. So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Welcome back to the Open, everyone. 20 minutes into the European trading day. Quite a lot of pressure across the board with the DAX, the CAC, and the FTSE 100 down between 0.7 and 0.8%. It's really China's economic concerns that are reverberating beyond the country's domestic markets. European stocks, of course, on the downside, and then we see how the U.S. opens. Now, more job cuts could be on the horizon at Goldman Sachs. The Wall Street giant is said to be considering a third round of staff reductions in less than a year as muted deal-making dents revenue. Now, the latest round of cuts impacts senior roles. Joining us now is Bloomberg's senior finance editor, Stefania Bianchi. Stefania, good morning. So what exactly is happening at Goldman Sachs?
That's right. As you say, this is the third round in under a year. Just in January, they talked about cutting about 3,200 jobs in what was its biggest round of cuts. And just a couple of months later, we're talking about 250 people being let go. These are more senior job cuts affecting senior executives, but it really isn't good news for bankers at Goldman, and it really is down to this issue of a slump in deal making that we keep on coming back to, and it really doesn't seem to be picking up anytime soon.
So, Stefania, is this Goldman specific or a broader Wall Street problem?
No, this is across Wall Street. I mean, we've had each month, each week, we keep hearing about these companies that are making these cuts. Lazard, they plan to reduce their global workforce by about 10%. Morgan Stanley is cutting about 3,000 jobs this quarter. And also, Citigroup has said, the CEO, Jane Fraser, has said that they're willing to make adjustments depending on investment banking revenue. And I think the bad news really is that this slump in deal making is likely to continue until the end of the year and perhaps even further.
So, Stefania, Credit Suisse has also reportedly dropped plans to open a local arm in China. What more do we know?
That's right. So this was due to be a locally incorporated bank in China. And we understand this is because of a potential regulatory conflict with what's happening at UBS. As we know, it's merging with UBS. UBS already has an onshore bank in China. So this is just another fallout of this deal that's ongoing. It's become a casualty. This planned bank in China has become a casualty of this merger. And I expect as this deal unfolds, we'll probably hear about more casualties to come.
All right, Stefania, thank you so much. Bloomberg Senior Finance Editor Stefania Bianchi. Now let's get your stocks on the move with Joe Easton. Joe, nice dose of beer, Heineken on a Wednesday morning.
Exactly, one of our favourite sectors, of course, France. So we are looking at Heineken today. As you say, that stock down around 2% in Amsterdam. This is after news last night that the Mexican Coca-Cola bottling company, one of their biggest shareholders, is selling around 3 billion euros worth of stock in the company. Now, we did know that they were looking to do that. They're looking to refine their business and focus on their core Coke business. But the important thing is the pricing. This did come earlier today on the terminal in it is at a discount at around 92 euros a share. We can see the stock trading at around 94. Heineken's actually had a bit of weakness in its stock price recently, given some concerns around volumes. There is some worries that beer drinkers will start to trade down and even cut back due to the higher beer prices, whereas spirits drinkers might be a bit more resilient, according to analysts. But as I say, that stock is getting hit today down around 2%.
Joe, talk to me about Entain. So this is a gaming company.
Exactly. So Entain, this is the big gambling firm. It owns the likes of Ladbrokes and Coral, GVC, these firms, and it's got a probe at the moment into one of its Turkish business. This is due to the tax issues around when it actually took over this company a few years ago, and they're saying that it's been investigated under the Bribery Act of UK law. Now, analysts had set around £200 million aside for this. That's what they put into their estimates, saying that they could actually face a penalty. But the wording in Entain's statement is pretty negative today. They're saying they're not sure how much a potential fine could be, and there's worries that it could be much bigger than that 200 million that was factored in. As we can see, that stock's down around 3%. It's actually the worst performing stock on the FTSE 100 today, Fran.
Yeah, and then SBB. Now, I always get confused, Joe, because I always think of the Swiss rail company, but this is not what you're talking about.
That's right. So this is SBB, which is the Swedish landlord. It's one of the biggest landlords over in Stockholm in terms of where it's listed. Now, they've got a bit of a dispute, interestingly, with one of the holding companies that owns a lot of stock. They stopped paying dividends to this company due to the fact that interest rates have really hit their outlook, hit the stock price, and hit all the real estate stocks around Europe. And now the holding company is saying that it's going to hold back on some of its loan repayments that it was supposed to give the firm, and that could potentially weigh on the company's earnings. We can see that stock down 7% today. It's heading towards a record low, but it's really symbolises the problems in the real estate sector. And that one's the worst performer in the Nordic markets today.
I mean, look at that. We should make a bet, Joe, on who can pronounce it, like pronounce the full name.
Yeah,
that's tempted to try.
It's kind of, it could be Welsh, couldn't it, the way that's how long that is. I mean, it's absolutely, yeah, I wouldn't want to attempt that.
Yeah,
definitely not on live TV.
Exactly. Maybe we'll do it off air and bet a pint or something like that. Joe Easton, thank you so much with the stocks to watch. This is a picture across the board for a lot of these markets. Stocks are slumping on the China economy data. If you look at, of course, some of the also hawkish comments we had from Federal Reserve officials, they definitely added to headwinds for stocks after a rally on Wall Street, fueled by excitement over artificial intelligence, fizzled yesterday. This is Bloomberg.
invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and their work. I know I deal with that all the time. This is really a people-first company. And even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at the 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. China manufacturing slump deepens in May, further denting the nation's recovery. Global stocks and commodities sell off. Well, Goldman Sachs is said to be weighing a third round of job cuts in less than a year. Plus, the U.S. House plans to vote on the debt ceiling bill today after clearing a key procedural hurdle. J.P. Morgan Chase Chief Executive Jamie Dimon tells Bloomberg he's hopeful it will pass. Now, this is a picture for the markets. A lot of pressure across the board with the European stock 600, 0.5% lower. The FTSE also 0.6% lower. China's economic mire with those PMI figures reverberating beyond the country's domestic markets. And then we also had a couple of Fed speakers that are adding to the hawkish stance across the board. Oil also heading to its biggest decline in 4 weeks. And then a couple of other things we're watching out for is the AI-related software. Yesterday, the big story is, of course, what happened with NVIDIA, but that fizzled out late yesterday. And of course, today the story is not only on the debt ceiling, but also on China and whether that economic recovery will be strong enough or not to sustain the rest of the world. So let's get on to the sectors that are on the move on European trading. If we have a look at the 20 groups that make up the stock 600, auto parts, consumer goods, construction material on the way down between 1.2 and 1.1% lower, the biggest losers. And then you just have three lonely sectors that are actually gaining. Are they gaining? I mean, telecom's flat, healthcare is flat, just utilities gaining 0.3%. Now, China's manufacturing activity contracted for a second straight month in May. It's more evidence that post-COVID recovery has slowed in the world's second largest economy. Now, for more on all of this, let's bring in Bloomberg's economist, David Chu. David, good morning, good afternoon. What's your reading on this latest data set from China?
Hi, good morning. We think that definitely the data set is not a good one, and it is suggests that the headwind to China's ongoing recovery is strong, and especially in the manufacturing side, the activity was facing strong headwinds, and at the same time we see imbalance in the recovery. That means the servicing sectors are related to the reopening from the COVID restrict, such as the travel and the catering services. They are still in the process of recovering. But other parts of the economy, they are facing sluggish demand and also the sluggish supply.
So people pay a lot of attention to China's housing sector. What signals, David, can we read from the data?
Again, not good. We saw the servicing sector related to the housing sector, the servicing component related to the housing sector is in the contraction range. So that it means that the activity in that sector is it's contracting. And also, we have seen the construction activity, the indicator for that was dropping, although it was still in the expansionary range, but still it suggests that the overall activity in the construction is facing some headwind and may slow in the future.
So, David, with the weaker than expected PMIs, do we expect any policy stimulus ahead?
Yeah, we think that the government and the central bank, they should consider more stimulus policies as soon as possible. Especially, we think that the monetary easing should help the economy better, because the monetary policy easing could deliver more positive or supportive signals to the economies and to strengthen the confidence of the market players, so that we tie a lot of hope to the monetary easing. But also we think that on the other hand, we think the fiscal policies can do something to increase the demand, such as the government can choose to accelerate investment in infrastructures. But we think the best choice is the monetary easing for now.
All right, so thank you so much, David Chu there, Bloomberg economist on China. Now let's stay on China. JP Morgan's chief executive officer says the bank will be in the country for both good and bad times. He remains committed to doing business there despite recent geopolitical tensions.
You know, America, the financial system of America, and the economy of America, it's still the most prosperous and largest economy the world's ever seen, the most innovative, the most growing, and the rest of the world relies on it. You know, so I think we shouldn't create any instability there. So I wish one day we get rid of the whole debt ceiling thing, but I understand when, you know, it's a democracy, people have different opinions about what we should be doing, and it's just one tool for one party to, you know, get the other party to the table. So I'm quite optimistic there, and I really do applaud the fact that they all sat down, spoke, got something done.
What's your read on inflation, on whether the Fed will go beyond the pause and hike again?
You know, my simple view is that, you know, they're right to pause at this point. It's been a big increase, you know, 500 basis points or so. Take a pause. But I do think it's possible they're going to have to raise a little bit more. That, you know, inflation is kind of stickier. I think people are coming around to that, which means rates may have to go up a little more. People should be a little prepared for that. It's just as a matter of manage your own business, be a little prepared for that. Whether you're a financial company or a real estate company, et cetera. I think the other thing I'd be a little prepared for is the volatility that might very well be created by quantitative tightening. We've never really had quantitative easing, which we've had now for, you know, the better part of 15 years, and now you're going to see quantitative tightening, and I think the effects may be a little harsher than people expect, but hopefully we'll get through all of that and I'll be okay.
You're pretty much well established on the mainland, which was your goal. But the things have changed. China's not necessarily the be-all, end-all anymore. We've had simultaneous crackdowns domestically on the platform economy, on property, on online gaming, on online education, not to mention COVID-0. You have a crackdown on consultancies. There's lots of pressure. I mean, are you recalculating your growth projection and the capability of that growth in China?
You went through a long list there, which I wouldn't agree with all of it. But I think when we do business in a country, and we do business in 100 countries around the world, we are there for the citizens of the country. And we're there, hopefully, through good times and bad times. We tend not to leave other than there's war or civil war. And so we're not predicting any of that here. You know, obviously, it's become a far more complex situation. You know, some for good reason, some not for good reason. And, you know, there's risk. There's always going to be risk. And I think you'll see companies react to different things for different reasons. Some is their own resiliency. Some is obviously national security, you know, will trump all other things. So, when, you know, our government tells us to do A, B, and C, we're going to do A, B, and C and support it. And I think there's a risk in China itself that, you know, if you, I've met with several people here, if you have more uncertainty, some of it caused by the Chinese government, well, of course, it's going to not just change foreign direct investment, which has gone up. a little surprisingly, and I don't think they should assume that's going to continue, but it's going to change the people here, their own confidence, their own ability to invest and do things. China's obviously going to do what they think is good for itself, and business might be a positive attribute, but national security will trump all those issues.
Now, I was just at G7 where we heard a lot of that rhetoric where they're de-risking, not decoupling. But again, the Chinese say it's one and the same. It's America trying to limit China's rise. And you've seen that bifurcation. There's more jargon, not to overemphasize all this jargon that's going out there. But again, do you see de-risking being different from decoupling?
Totally. So if you ask me, over time, yeah, there'll be less trade. It'll take years for these things to take place, but it won't be a decoupling. And the world will go on. I think, like I said, I think far more important is what's happening in Ukraine right now. And so hopefully this will sort out, and it'll never sort out if people don't talk. So I urge people, have some real deep conversation, get to know each other a little bit, each other's concerns about some of these issues, and things would be better if we had that.
That was Bloomberg's Stephen Engel speaking to JP Morgan's chief executive, Jamie Dimon, exclusively. Coming up, EU and U.S. officials meet in Sweden today to talk key issues, including China and security. We discuss what else to expect. That's next, and this is Bloomberg.
Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman sisters rather than Lehman Brothers, the world might well look a lot different today.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
Welcome back to the Open, everyone. 42 minutes into the European trading day. This is a picture across the board. The DAX and the CAC actually losing less than they were 15 minutes ago. They're still down 0.5%. The focus firmly on China economic data and a lot of questions about what that means for the rest of the world. Now, top officials from the EU and US are meeting in Sweden today for the Trade and Technology Council. They'll look to strengthen their cooperation on key issues from China to economic security. Let's get more now from our Europe correspondent, Maria Tadeo, in Brussels. Maria, good morning. So what's top of the agenda?
Yes, Francine, and it's a busy agenda for the TTC, the Trade and Technology Council. Remember, this is a bilateral platform that brings together a U.S. delegation that is led by the U.S. Secretary of State, Antony Blinken, and the European Union with a number of commissioners, essentially range from everything from trade to the internal market. Now, a lot of this is about strengthening the cooperation between the EU and the U.S., but this year the conversation really is about China. And I was struck by that interview that you played at the start of the show from Jamie Dimon, again, repeating this idea of China and how to do business with China. That was a question that Mr. Blinken reported to and asked yesterday, was asked by reporters in Sweden, and this is what he had to say. Let's take a look.
Both the United States and Europe, I think, believe that, again, this relationship is an important one that we seek to sustain, but with our eyes wide open. And so both the United States and Europe are not in favor of decoupling, but we are in favor of de-risking. And you've heard that from the leadership on both sides of the Atlantic.
Blinken, again, repeating, Francine, what is the buzz sentence that we hear repeatedly, the terms of no to de-risking, well, focus on de-risking, no to decouple. The issue for a lot of countries is that even the idea of de-risking, it sounds good, it has a nice ring to it, but what does it actually mean? And that is a debate that will be going on today between these two delegations. What we understand, and there's two things to watch out for, is in terms of the statement and the final conclusions, the Europeans do believe that this is not the format to go after China, that instead they should focus on the positive aspects of this cooperation between the U.S. and the European Union. The United States, however, wants something similar to the G7 statement. Remember, that was a page that contained 20 references about China and really stressed issues like political and economic coercion. Both need to agree, but again, you see this Chinese question is front and center, but how to calibrate even the term de-risking, it's very complicated.
It is very complicated. We've also seen AI dominate the news flow and move stocks. How is this playing into discussions, Maria?
Yes, and look, this is the talk of town. Everyone is focused on artificial intelligence. We've talked about the NVIDIA story, the $1 trillion story, and this will also be a part of the debate here. Remember, the G7 already said they wanted to work towards, quote, trustworthy artificial intelligence that would protect intellectual property, but also focus on disinformation. And Francine, we are being told, by the way, that today, Margaret Vestager, remember, she has been, for some U.S. companies, a real nightmare. She would say she has been the protector of European interests on her part, but she will have a conversation virtually with Sam Altman, who is the CEO, obviously, of OpenAI. Remember, he was on a European tour very recently, met with the French president, and there's also rumors and speculation that he wants a new headquarters in Europe. He didn't stop in Brussels. Well, today he gets to speak with Margaret Vestager, so to be a fly on the wall in that meeting.
Yeah, that would be pretty cool. I know you'll make the calls, Maria, to know what they're talking about. Maria Tadeo, they're our Europe correspondent in Brussels. Now let's also get to the Bloomberg First Word News. And let's start with the U.S. House Speaker Kevin McCarthy dismissing threats from Republican hardliners to remove him from his job. The debt limit deal, has he agreed with President Joe Biden, is heading for a vote in the House later this evening. Now, despite GOP objections, the bill cleared a crucial hurdle on yesterday when the powerful House Rules Committee voted 7-6 to advance the bill. Now, North Korea has confirmed that an effort to launch a military spy satellite into orbit failed earlier today. The official news agency reported a rocket crashed into the Yellow Sea after losing propulsion in the second stage of the ascent. Now, the launch initially prompted missile alerts in both Japan and South Korea. Pyongyang says it will attempt another launch very soon. Elon Musk has told China's foreign minister in Beijing that the interests of China and the U.S. are intertwined, echoing recent remarks from the bosses of Apple and Mercedes-Benz. Now, the Tesla chief met Ying Yang on his first post-COVID visit to China. Musk is expected to tour Tesla's Shanghai factory later today. And Theranos founder Elizabeth Holmes has reported to prison to start her 11-year sentence for defrauding investors over the company's unreliable blood testing technology. A federal court convicted Holmes of wire fraud and conspiracy last year, with her final appeal failing last month. Now, the 39-year-old is being held in a minimum security prison near Houston, and that's your Bloomberg First Word News. Coming up, the Italian Prime Minister Giorgia Meloni has 5 months to pick a successor at the Bank of Italy. What should we expect? We discuss that next. This is Bloomberg. So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Daybreak Europe. Good morning, good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
We've owned NVIDIA since inception. Some of our funds still own it. We are looking to the software providers who are actually right now where NVIDIA was when we first bought it. So NVIDIA was in the $5 to $10 billion range. Now it's $1 trillion, as you said. We are really happy that, investors who own benchmarks like the NASDAQ and QQQ still own NVIDIA. They own it in some of our portfolios, but we're on to the next thing. NVIDIA is a hardware stock, and sure, it has some software, but the history of hardware and software is the bigger beneficiary over time is going to be software.
That's the ARK Invest Chief Executive Officer and Chief Investment Officer, Cathie Wood, there. Now, time is running out for the Italian Prime Minister, Giorgia Meloni, to pick a new Bank of Italy chief. The appointment may be one of the most significant that the PM gets to make. Now, the current governor gives his final annual speech today, leaving Meloni 5 months to replace him. Well, Chiara Albanese, our Italy government reporter, joins us now with the very latest. Chiara, as always, great to speak to you. So what kind of decision can we expect from Giorgia Meloni?
Hi, Francine. Yes, for Giorgia Meloni, this decision that is coming up is probably the biggest she has to make yet. The Bank of Italy governor is not only a very powerful figure in Italian and European politics, but also it is a sort of ultimate state control over the troubled finances and the billions of debt on which Italy is sitting on. So picking a name that is reassuring to investors, but also in line with the government, that can speak freely to Meloni and the current leaders in Italy and advise them on what are the best moves to make will be crucial to keep the spread and the confidence that the current government is enjoying.
So, Chiara, how significant will her decision be for the future path of Italy?
It will be a crucial decision because the new name will probably last longer than the government itself, but also because it will involve also a contribution of all the main institutions in Italy. The cumbersome and complicated process to appoint new governor also involves the parliament and President Sergio Mattarella. So it will be a test for Meloni of showing that she has also a grip on other institutions as well, and not only on her government and her party.
So, Chiara, the current governor of Banca d'Italia, Ignazio Visco, is delivering his last speech today. What are you looking out for?
Visco is speaking today in Rome. He is having a bold address. He has been so far not a shy figure. He is being quite bold in showing the current trend. So he is expected to indicate and suggest that the new pick, so his successor, will have to be, as much as him, a very delicate and balancing figure rather than a person that might rattle feathers.
All right, Chiara, thank you so much. Chiara Albanese, there are Italy government reporter. I do think the government is staying on a bit longer, certainly until October, so we'll see whether he'll make more speeches from now until then. Now, let's also take a look at some of the things that markets are watching out for today. We get a host of inflation data from across Europe today, including a provisional reading of Italian CPI for May at 10 a.m. UK time. At 1 p.m., then we get a provisional reading for German CPI for the month of May. 3 p.m. U.S. job opening data is released for April. 7 p.m. UK time, the Fed publishes its latest beige book, giving insight into the economic conditions across the U.S. So let's also look at some of the other movers that is happening in the markets right now. Let's start with Heineken. Of course, Joe Easton was looking at Heineken as one of the biggest movers, down 2%. This is after a Mexico Coke bottler, FEMSA, has actually sold about 3.3 billion euros of its shares in the Heineken Group, divesting its stake in the Dutch brewer as it plans to focus on its main business. So that's putting a bit of pressure of Heineken, down 2.2%. The other story we're watching out for is Glencore. Now, Glencore, one of not really biggest movers, but certainly one of the biggest stocks where there's news around. So Glencore is set to ready a sweetened tech bid to try and break the deadlock. There's a couple of big M&A bids that some companies are looking after in Glencore in the middle of this battle. Now, overall, this is what we're seeing across the board. If you look at some of the sectors, but also some of the cross assets, a lot of the focus is on treasuries in the U.S. ahead of that debt deal. And then a couple of the other things that we're watching, of course, is that China PMI figure really putting a little bit of a dampener because of these economic worries and, of course, these troubles in China's economy reverberating beyond the country's domestic markets today. That's it for the European Market Open. Surveillance Early Edition is up next. We'll also look at copper extending its worst monthly loss in almost a year. Iron ore falling further below $100 a ton. Again, this is on China's slowing manufacturing, and that's raising concern about demand from the top metals consuming economy. We'll have plenty more throughout the day. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. The top names at the Fed are on Bloomberg.
Right now, if you had to tip the scales, the next move is going to be an increase or a cut. It's pretty heavily weighted to the increase for me.
Nobody covers the Fed like Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. China's manufacturing slump deepens in May, further denting the nation's recovery. Global stocks and commodities sell off. French inflation slows more than expected in May on lower energy and food costs. A boost for dovish voices at the ECB. The first German state to report also shows a drop. Plus, the U.S. House plan to vote today on the debt ceiling bill after clearing a key procedural hurdle. J.P. Morgan Chief Executive Jamie Dimon tells Bloomberg he's hopeful it will pass.
So I wish that one day we get rid of the whole debt ceiling thing, but I understand when, it's a democracy, people have different opinions about what we should be doing, and it's just one tool for one party to, get the other party to the table. So I'm quite optimistic there, and I really do applaud the fact that they all sat down and spoke, got something done.
Well, first things first, let's check on the markets. The ECB saying there are vulnerabilities in the financial system revealed by rate hikes. We're also getting quite a lot of data. So first of all, we have Italy final first quarter GDP rising 0.6%, a little bit better than the preliminary 0.5%. And then I hope you all studied geography, German geography at school, because we have CPI by the various states. So you have Hesse, Bavaria, Brandenburg. I don't know why I need I feel the need to actually pronounce it in a German accent, which I'm very bad at. But for the month of May, if you look at Hesse year on year, it's 5.9%. It does seem to be pretty much in line with expectations. Baden-Württemberg actually gaining 6.6%. So they're gaining, but they're not gaining as much as expected, or certainly there's a little bit of a slowdown, is what we heard also from French CPI, but also some of the Spanish CPI that we saw. So the difference in terms of the maps, when you look at the CAC 40 and elsewhere, for example, the FTSE down some 0.3%, the CAC 40 is down 0.6%. The focus firmly on Chinese data that disappointed in terms of PMI, so that gives us a little bit of pause for reflection, how much consumption they'll do of some, for example, of the sectors, including some of the metals, which is why we're seeing a bit of focus on oil, iron ore, and copper. Those are down, and those are some of the biggest sectors that are losing. Now, China's manufacturing activity, as we were saying, contracted for a second straight month in May. It's more evidence that the post-COVID recovery has slowed in the world's second largest economy. Now, global stocks and commodities are lower, as well as the offshore yuan. So let's stay with China. And J.P. Morgan's chief executive says the bank will be in the country for both good and bad times. He remains committed to doing business there despite geopolitical tensions.
When we do business in the country, and we do business in 100 countries around the world, we are there for the citizens of the country. And we're there, hopefully, through good times and bad times. We tend not to leave other than there's war or civil war. And so we're not predicting any of that here. Obviously, it's become a far more complex situation. Some for good reason, some not for good reason. And, there's risk. There's always going to be risk. And I think you'll see companies react to different things for different reasons. Some is their own resiliency. Some is, obviously, national security, will trump all other things. So when, our government tells us to do A, B, and C, we're going to do A, B, and C and support it. And I think there's a risk in China itself that, if I've met with several people here, if you have more uncertainty, some of it caused by the Chinese government, well, of course, it's going to not just change foreign direct investment, which has gone up a little surprisingly, and I don't think they should assume that's going to continue, but it's going to change the people here, their own confidence, their own ability to invest and do things. China's obviously going to do what they think is good for itself, and business might be a positive attribute, but national security will trump all other issues.
Now, I was just at G7 where we heard a lot of that rhetoric where they're de-risking, not decoupling. But again, the Chinese say it's one and the same. It's America trying to limit China's rise. And you've seen that bifurcation. There's more jargon, not to overemphasize all this jargon that's going out there. But again, do you see de-risking being different from decoupling?
Totally. So if you ask me, over time, yeah, there'll be less trade. It'll take years for these things to take place, but it won't be a decoupling. And the world will go on. I think, like I said, I think far more important is what's happening in Ukraine right now. And so hopefully this will sort out, and it'll never sort out if people don't talk. So I urge people, have some real deep conversation, get to know each other a little bit, each other's concerns about some of these issues, and things would be better if we had that.
Long time ago. Me too. Well, that was Bloomberg's Stephen Engel speaking to J.P. Morgan's Chief Executive Officer, Jamie Dimon. I was distracted because I was speaking to Paul Donovan, Chief Economist at UBS Global Wealth Management. It wasn't high-level stuff. We were trying to remember how you pronounce a lot of the German cities, actually, because we both studied German. Comes in handy when you look at CPI from Germany. Paul.
Absolutely, yes, because it's coming out from all of the regions. But there's a fairly consistent picture, actually, that we've had with the Eurozone CPI numbers over the course of yesterday and today, which is it is coming down. Yep. And this whole idea of price stickiness, the inflation is going to be sticking around, is really being blown out of the water by these numbers. So the Spanish data, of course, came in very low. There's no stickiness there. And actually, interestingly, we're also getting this confirmed in the regional data in the United States. So, New York, Los Angeles have seen big declines in their CPI numbers. Doesn't appear to be very sticky to me.
Yeah, and you were one of the first ones, actually, I remember 4 or 5 months ago, coming on to say about some of the deflationary prices that we saw. And I think at the time you were mentioning, like, LED screens. Yeah. I mean, could it be that inflation will come down as fast as it came up? Or is that wishful thinking?
So I think that the issue that we've had is, of course, we've had 3 very different inflation episodes, just bang, 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 one after the other. The transitory inflation episode of durable goods, I mean, that's now in extreme disinflation or outright deflation, depending on which country you're in. The energy price supply shock, which has been the second wave, that's starting to slow down now. But the profit-led inflation is very culturally sensitive. So different countries have got different degrees of profit-led inflation. Yeah. Quite hard to see, say, in Switzerland, but a lot more common here in the United Kingdom. That speed of that decline will vary from country to country.
But so overall, are we in a much better place for the world economy? I was looking back actually at some of the forecasts that we had for the UK economy, and this is like the vanishing recession. We're not even expecting a recession anymore. So will we be able worldwide to get away with a kind of mild slowdown?
So I think we do get a mild slowdown now. The negative forecasts that you're talking about would tending to come from the IMF, the OECD. They tend to be quite a long way behind the curve. So the market's long since discounted this sort of stuff. So it's not necessarily going to shift market expectations. But yes, we're getting, I think, a definite slowdown. But I have reasonable hopes that we will stabilize real incomes for consumers by bringing down inflation. And remember, we've just had 2 catastrophically bad years for real wage growth in every major economy. Now, if we can stabilize that relatively quickly by bringing down the inflation rate. That's going to stabilize consumer demand. We get a slowdown, absolutely, but it's not sort of the extreme negative scenarios that some people are worried about.
What do you do with China right now? So we had those PMI figures that is really, dragging a lot of markets lower, and concerns about how much copper and iron ore they'll consume.
So I'm always inclined to take survey-based evidence with a big bucket of salt. Survey-based evidence is very, very problematic. You get partisanship, you get the media cycle influencing it, and so on and so forth. What I think we can say, looking actually at the Chinese data, but also at the Japanese data that came out today, is that there is very clearly this ongoing shift amongst global consumers in favor of spending on services rather than spending on goods. The fanatical desire to go on holiday seems to be still in place.
Yeah.
But,
and here to stay?
And I think probably here to stay. I think there has been a shift. This was one of the psychological breaks coming from the pandemic. If you bought a new washing machine in 2021, you're not buying a new washing machine in 2023. If you're working from home, your company is scaling back the amount of office equipment that it's buying. So all of these things are leading to a rebalancing in favor of services and away from goods. And of course, for a goods-producing country like China, that's bound to show up in weaker manufacturing data, and also sentiment, though whether the sentiment actually reflects the underlying activity is a more moot point. We saw that also with the Japanese industrial production data, and within the detail, it is more the export side that we're getting this moderation coming through.
All right, Paul, thank you so much. Paul Donovan, Chief Economist at UBS Global Wealth Management, stays with us, and we'll talk about the U.S. debt ceiling. The deal does seem to be moving forward with a crucial House vote expected later today, so we'll look at how the markets are reacting next. And this is Bloomberg.
Person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
News breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the debt limit deal struck by President Joe Biden and Speaker Kevin McCarthy heading towards a vote in the House. That's after it cleared a crucial procedural hurdle with just days remaining to avoid a default. Well, we're now joined by UBS Global Chief Economist Paul Donovan, rejoined. So thank you so much, Paul, for sticking around. Is it, I wouldn't call it plain sailing, no, but is it now a done deal?
I think so. I mean, you've got to believe that
very wary, I think
somewhere in Congress there is a tiny iota of common sense. I am weary. It's like reliving the Brexit trauma all over again. This thing just never goes away. But I think, yes, we're going to get lots of shrill voices from political extremists, but I think basically the moderates will get this through.
So what are you looking at for in the next couple of days? Is it, if Kevin McCarthy keeps his job? Is it kind of big moves in T-bills in case there's another hurdle, or how they will deal with the debt longer term, which is a whole other issue?
So I think the market will just not pay any attention to the longer-term debt issues because the market doesn't tend to think that far in advance. I suspect that what we're going to see is a little bit of angst around the vote and probably a little bit of a relief rally. But the market, as I said, I think the market essentially adjusted with the weekend agreement. Does McCarthy keep his job or not? I don't think the market cares that much, other than if we're embroiled in yet more infighting in the House Republican Party, then that just delays anything else happening, and any other legislation, you just push even further. We've just wasted the last 2 months, with this whole farce, and now potentially there's another issue that comes up. So that would be a little bit problematic for some aspects.
Paul, you're a very good long-term thinker, and so I don't know whether we spoke to Jamie Dimon, who says, look, he's not really seeing any decoupling from the U.S. and China, although things are much more complex. Does something like the debt ceiling, go to the heart of the issue of what happens to dollar as a reserve currency, even if it takes 10, 15 years?
I don't think so, because at the moment there still is no alternative. We've got to remember the point of a reserve currency is it's where you want to keep your savings as a country or as an international organization. And so you need liquidity, you need rule of law, you need political stability, you need absence of exchange controls. You also need large liquid markets. There really is not a viable alternative to this. And actually, we're seeing this. You sometimes hear central banks saying, oh, we're going to start doing trade in this currency. But then they follow it up with, because we want to keep our reserves in dollars. So the dollar has still got that primacy as a reserve currency for now. And I don't see that changing in the next decade or so.
Paul, we're also about to, June is tomorrow, and that's Pride Month, and I know you do a lot of work at the crosshairs of, economics and diversity and inequality, putting actually numbers onto this. Are we doing much worse in terms of LGBTQ?
We're doing better and worse. So there is, if we look in the States, this year alone, there's been almost 500 pieces of anti-LGBTQ plus legislation in state legislatures, which is absolutely horrendous. On the other hand, there's a strong fight back, and some, in fact, quite a number of these pieces of legislation have been overturned. I think that companies are increasingly recognizing that they want people to come to work and be the best person they can, the best employee they can. You want the right person in the right job at the right time, and that means a diverse and inclusive workforce. And I think this is part of the broader issue of impact economics. Economics is evolving. People now don't just want the latest smartphone, though they do want the latest smartphone. They also want a sustainable planet, and they want diversity and inclusion. They want equality. They want themselves and their family members to be treated with respect. So all of that is coming together as a gradual evolution of where economics is going. So I think that there are reasons to be positive, but it doesn't mean that I think the LGBTQ plus community can give up the struggle, because struggle they must.
Do you look at it from region by region? I know you do also a lot of work on labor, labor dynamics and female participation.
Yes, so here we are seeing some improvements post-pandemic, because of course in the pandemic, female participation in the workforce fell. Disproportionately, women were responsible for looking after children's education. They were perhaps in part-time employment where the jobs weren't being kept during the pandemic. Now what's happening, as we move more and more to flexible working, the whole issue of childcare becomes more flexible. So whoever is the principal child caregiver, whichever gender, now has more options available to them, because you can work close to the school at a job you're really good at. You're just doing it from home. You don't have the long commutes anymore. That sort of thing is actually really helping, and we are now starting to see female participation above 2019 levels, which is obviously to be very much welcomed.
Paul, what does this mean for, I guess, economic prosperity? Again, we have a very tight labor market, so the more people come back into work, presumably it takes the edge off for a lot of central bankers.
It takes the edge off some of the numbers. I would dispute whether we can describe labour markets as tight when we've just had so bad a period of real wage growth. So on some aspects it's tight, on other aspects it's not. But I think what you end up with is a more productive, a more efficient workforce, because you're putting the right person in place without paying any attention to irrelevant details like gender or sexuality or race and so on.
Paul Donovan, just brilliant on a lot of these key issues that we're trying to put the spotlight on. UBS Global Chief Economist there, Paul Donovan. Now, coming up, top officials from the EU and the US are meeting for a second day in Sweden for the Trade and Technology Council. We'll bring you what to look out for next. This is Bloomberg. So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, top officials from the EU and the US are meeting in Sweden today for the Trade and Technology Council. They look to strengthen their cooperation on key issues from China to economic security. Now, let's get more from our Europe correspondent, Maria Tadeo in Brussels. Maria, so good morning. What's top of the agenda today?
Yes, and it's a busy agenda, Francine, because remember, this is a bilateral platform that was created between the United States and the European Union to deal with some of the pressing issues and trade, technology, of course, and the cooperation between the two sides. But today, one of the big focus, if I may say, will be China. For many diplomats, as you know, Francine, this is the defining question almost of the century, and just managing this relationship is the key question. Now, we've talked about a lot of de-risking, decoupling, what is the right balance. Yesterday, the U.S. Secretary of State, who is leading the American delegation, said they have a clear line and want to stick with it, and that is focus on de-risk, but do it seriously. Let's take a look.
The United States and Europe
I think, believe that, again, this relationship is an important one, one that we seek to sustain, but with our eyes wide open. And so both the United States and Europe are not in favor of decoupling, but we are in favor of de-risking. And you've heard that from the leadership on both sides of the Atlantic.
So no decouple, but yes to de-risking. Again, the problem is that is a term that everyone is using. You played that interview too with Jamie Dimon. Everyone is buzzing around this word, but when it comes to the actual substance, there's a lot of different opinions in terms of what de-risking means. And you see that play out in this meeting. Some Europeans believe that in a format like the TTC, you should not be calling out China aggressively. It's not the time, it's not the place. The United States wanted something similar to the G7 language, which again mentioned China 20 times and floated issues like economic coercion. It'll be interesting to see today whether there's any references to potential restrictions when it comes to outbound investment and trade from European and American companies going into China. That is seen as the next frontier, but again, this is a very lively debate. What de-risking means in details, that is still up for play.
Yeah, and it is indeed a very lively debate. Maria, thank you so much. Maria Tadeo there with the very latest from Brussels. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Elon Musk has told China's foreign minister in Beijing that the interests of China and the US are intertwined, echoing recent remarks from the bosses of Apple and Mercedes-Benz. The Tesla chief met Chen Gang on his first post-COVID visit to China. Musk is expected to tour Tesla's Shanghai factory later today. Now, North Korea has confirmed that an effort to launch a military spy satellite into orbit failed earlier today. The official news agency reported a rocket crashed into the Yellow Sea after losing steam in the second stage of the ascent. The launch initially prompted missile alerts in both Japan and South Korea. Pyongyang says it will attempt another launch soon. And Theranos founder Elizabeth Holmes has reported to prison to start her 11-year sentence for defrauding investors over the company's unreliable blood testing technology. A federal court convicted Holmes of wire fraud and conspiracy last year, with a final appeal failing last month. The 39-year-old is being held in a minimum security prison near Houston. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. And let's also have a look at NVIDIA that really had forecasts that blew everything out of the water. Yesterday it was gaining and became a $1 trillion company. Today, a little bit maybe of profit taking, but really it's not much given the general market context, down 1% in pre-market. Coming up, we'll be joined by Morris Reed, partner at global consulting firm Actum. We'll get his views on the debt ceiling and what's happening in the global economy. That's coming up next, and this is Bloomberg.
Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
From our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
China's manufacturing slump deepens in May, further denting the nation's recovery while global stocks and commodities sell off. French inflation slows more than expected in May on lower energy and food costs, a boost for dovish voices at the ECB. The first German state to report also shows a drop. Plus, the U.S. House plans to vote today on the debt ceiling bill after clearing a key procedural hurdle. J.P. Morgan chief executive Jamie Dimon tells Bloomberg he's hopeful it will pass. Be news if he didn't. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, J.P. Morgan chief executive Jamie Dimon says he's optimistic that a debt ceiling bill will make it through Congress before the U.S. defaults. Well, he spoke exclusively to Stephen Engel a short time ago.
You know, America, the financial system of America, and the economy of America, it's still the most prosperous and largest economy the world's ever seen, the most innovative, the most growing, and the rest of the world relies on it. You know, so I think we shouldn't create any instability there. So I wish one day we get rid of the whole debt ceiling thing, but I understand when, you know, it's a democracy, people have different opinions about what we should be doing, and it's just one tool for one party to, you know, get the other party to the table. So I'm quite optimistic there, and I really do applaud the fact that they all sat down and spoke, got something done.
What's your read on inflation, on whether the Fed will go beyond the pause and hike again?
You know, my simple view is that, you know, they're right to pause at this point. It's been a big increase, you know, 500 basis points or so. Take a pause. But I do think it's possible they're going to have to raise a little bit more. That, you know, inflation is kind of stickier. I think people are coming around to that, which means rates may have to go up a little more. People should be a little prepared for that. You know, just as a matter of managing your own business, be a little prepared for that. Whether you're a financial company or a real estate company, et cetera. I think the other thing I'd be a little prepared for is the volatility that might very well be created by quantitative tightening. We've never really had quantitative easing, which we've had now for, you know, the better part of 15 years, and now you're going to see quantitative tightening, and I think the effects may be a little harsher than people expect, but hopefully we'll get through all of that and be okay.
Well, that was J.P. Morgan Chief Executive Officer Jamie Dimon speaking exclusively to Bloomberg's Stephen Engel in Shanghai. Now, the U.S., it seems, is heading towards a deal to raise the debt ceiling, with Congress weighing up a bill ahead of the vote. Now, while progress is being made, cracks continue to appear in the U.S. economy, with consumer confidence falling to a 6-month low. Well, we're now joined by Morris Reed, partner at global consulting firm Actum. In a previous life, was also in U.S. politics, so he knows the inner workings of Washington. Morris, thank you so much for joining us. Debt ceiling, are we going to get something in the nick of time? Is there any chance that we don't get a deal?
We'll get it, absolutely, because we have to have it. The entire world is dependent on it. And it would be too much pain and suffering, not just for the consumers, but the political class would suffer immensely. So we'll get it done. It'll probably get done Saturday night, Sunday, vote on Monday, but it'll be done by Tuesday.
So who's it a big win for?
It's Kevin McCarthy. He is, in my opinion, he stood shoulder to shoulder with the president and didn't blink. People are surprised that the way he came into office, the fact that he would be able to push this through his caucus, which the White House completely underestimated, which is why they waited so long. So I think that Kevin McCarthy, as you remember, it started at the Big Four, the Big Two, and then it was mano a mano, Speaker and the President. And I think he did a great job, and he stood shoulder to shoulder and didn't blink.
But, Morris, at the same time, we're seeing lawmakers from the Republican side calling for him to resign. And I think he was asked about it yesterday, and he said a simple, nope, that's not going to happen.
Right.
Is he going to get internal pressure from having, so-called caved in?
No, I think what you'll see is the fringe elements, right? Both on the Republican side, the crazy right, as we call it, and then the Democratic side, the progressive or the crazy left. Both of them are unhappy, which is always a good sign when both are unhappy. But he has a solid block, and frankly, the Democrats need this to push through. Quietly, and now starting to be louder heard, is Democrats upset the way the White House has handled this because they feel they've pushed them in a corner where they don't have much wiggle room.
Well, we've spoken to a lot of money managers, like, big private equity, also Science, saying they're always a little bit worried, especially the ones that are not based in the U.S. They're always worried in a U.S. election cycle because you don't exactly know where it ends up with. Is there going to be much more China bashing from both sides?
Absolutely. We're going to see much more China bashing through the election. Also, frankly, the Ukraine situation will go through the election, but that's because what Vladimir Putin people want. But there will be a lot of bashing. With the debt ceiling, this will very quickly move into the presidential election, right? Because Donald Trump will jump on this, and that process will move very quickly. Usually it waits until September. It'll move very quickly on Memorial Day now.
But more, if we have a debt ceiling agreement, and this is like, locked and loaded, signed before it becomes ugly, are we going to see both sides coming closer on key issues, or no?
Not at all, not at all.
This is just a one-off.
This is a one-off, but it also gives the Republican Party in the House the ability to be more aggressive. They push the president in a corner. You'll start to see them being much more aggressive on some of the border issues, much more aggressive on some of the Hunter Biden issues. They realize that they can block the president's legislative agenda, which is okay for the president because he'll pull back and start to run a Rose Garden strategy where he'll govern by executive order. So both sides see victory here and some room to wiggle.
But, governing by executive order, is that a bad thing as you get into the presidential election?
No, frankly, it's a good thing when you use the bully pulpit, because as the President of the United States, no one has a larger bully pulpit. So this will work in Biden's favor, particularly if he has a candidate like Donald Trump, who will be extremely focused on the media.
Who's going to be the Republican nomination?
Well, if you looked at DeSantis' disastrous start, he's not ready.
What happened?
I think he just got bad advice. I think that he's a 44-year-old successful governor. In America, as you know, you run to lose to run to win. So he could be setting up the bank shot. But to me, it looks very clear that Donald Trump will be the nominee on the Republican side.
I mean, this is, quite unusual given a lot of the lawsuits against him. I mean, could he actually run? Is there a chance, first of all, that he goes to prison? And
I don't think there's a chance.
Prison?
I don't think there's a chance he goes to prison, but unfortunately, he could be in prison and still run for president of the United States. But I don't think he'll go to prison, but I do think he'll be the nominee.
If there's a Trump versus Biden presidential election, who wins?
I think it's probably lean Biden. There's so many significant people, voting blocks, particularly women, voting blocks against Donald Trump. I think it would be difficult. Anyone else against Biden, maybe it's a toss-up.
Yeah, why is there still such a stronghold from Trump, given everything that we've seen in the last 36 months?
Money matters. Right? He has a strong base of support, and he can raise money at an unprecedented level. So when you can do those two things, you ultimately, in American politics, generally get to the front of the pack.
Morris, we also have Rishi Sunak actually going to Washington next week. He's looking for a U.S. trade deal. Will he get it?
Absolutely not. And they have mismanaged this from the very beginning. What they don't understand in the UK is that the world has changed. You don't go to Washington through the front door to get a trade deal. You look at where the trading partners are working. That means in the States, you build support from the ground up, and then you put pressure on the White House. This is a White House that's been reluctant to do trade deals, and they won't do a trade deal, particularly in a political season, if there's no political backing, no political will. And that's what's lacking. I think he'll go there. There'll be a lot of happy talk, but he certainly won't get a trade deal.
But is this because it's the UK, or is this because also it's a prime minister that's quite weakened?
No, this has been from the beginning. The three prime ministers ago, they mishandled this because they were still thinking that you do it the old traditional way instead of understanding how you really affect change in Washington, which is outside the Beltway, galvanize support, put political pressure, and have the White House to do something for their constituents as opposed to foreign government.
So aside from China bashing, what does President Biden focus on?
Ukraine. I think that this is going to be an overwhelming focus for him, making sure...
More money, more weapons?
Yeah, more money, making sure that he's managing his caucus on the Hill, making sure that the Republicans continue to be... Some of the people are outliers, but most people understand the importance of Ukraine. He's also going to be looking at how this impacts Europe, because if you look at what, as you and I talked in the past, next year is U.S., U.K., and EU. I think we're going to have major change in the UK. I think you're going to look at the EU. They're going to be really consumed by Ukraine because of the inflation, but they also have to worry about being in between these big, China and America and how they play that just opposed to the relationship long term. So Biden's got a lot of things to worry about, but ultimately I think he has a clear path to victory if he's able to rally key constituencies and not fumble the ball.
But Morris, what about the economy? So if the Fed has to crush the economy to get to the inflation target, does that scupper Biden's re-election chances?
I don't think it does, but it certainly is going to make it more difficult. No president wants to have inflation going into a re-election. But it has to be realistic about it. And we can't, in America, we don't manage the Fed. The Fed does its own thing. But the president needs to get ahead of this, and he needs to make sure. A perfect example is the fact that he's got this $1 trillion infrastructure project, and none of the money has hit the street.
Right.
So if he really wanted to have a way to fight this, he would push very hard to get money on the street, particularly in the next 18 months.
Yeah, and as long as jobs hold up.
If job holds up, but if you put $1 trillion to work, jobs will hold up.
Yeah, but then the inflation concern could be accentuated. Morris, thank you so much, as always. Morris Reed, their partner at global consulting firm Actum. Coming up, Britain, famous for its rain. Yes, it is. So why does the UK face a water crisis? We'll tell you why when we return. And this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The jobs report has not been good news for the Fed.
3.4% unemployment.
That's not the picture Jake Powell thought he'd be looking at.
It really signals an employment market that's chugging along
miles from where the chairman of the Fed wants to be.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
It hasn't been a widespread job loss.
Tightening has yet to show up.
Fed's not going to quit until the labor market quits.
The May Jobs Report, Friday on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bloomberg has learned that commodities giant Glencore is getting closer to increasing its offer for Teck resources. In a move aimed at ending the battle for the Canadian miner, Glencore is seeking to force Teck to the negotiating table with an improvement to its $23 billion bid. Teck patriarch Norman Keevill's super voting shares gave him a veto on any big decisions. Keevill has so far strongly opposed the deal. Now, NVIDIA's market valuation fleetly crossed the $1 trillion threshold after the chipmaker's AI prospects vaulted it into an elite club of just 5 American companies. Alphabet, Amazon, Apple, and Microsoft are the only others to have trillion-dollar valuations. Fewer than 10 companies globally have ever achieved the distinction. And Microsoft's fight with the UK over its takeover of Activision Blizzard has received a boost after a judge said the US software giant's appeal can start earlier. The UK antitrust regulator, which has blocked the $69 billion deal, had wanted to delay the hearing until later this year. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, Britain, famous for its rain, but now the UK risks becoming a cautionary tale of how developed countries can squander one of its most important resources. Now, a fifth of Britain's water supply is lost through leaks. And now the situation is actually being made worse by climate change. So let's find out more. Bloomberg's Olivia Rutgard is here with the very latest. Olivia, good morning. Thanks so much for coming on. You wrote a beautiful piece on this, important piece that we're also pushing out on social media. We have a water crisis in a country that's long been associated with soggy weather and an abundance of water. So how did we get here?
Yeah, so probably the first thing to say is that Britain is a bit less soggy than people might imagine. So
it doesn't feel like that.
I know, it doesn't, does it? But certainly in the southeast, London, where we are now, you know, we get less rain than parts of the Middle East, parts of Africa. People might be really surprised to know that. So there's an existing issue there. And then in terms of the kind of ongoing issue, there are two ways you can think about it. There's the supply side, there's the demand side. So in terms of demand, people actually use more water in this country than they do in a lot of Europe. So it's about 150 litres a day, which is more than the European average of about 120.
Do you know why?
It's partly because I think people don't think about water as a scarce resource. Yeah. Exactly. So I think that's part of it. Yeah. I think probably some of it comes down to the weather. We do get cold winters, so maybe we're taking long hot showers in a way that, you know, say if you live in Spain or somewhere like that, you might not. But I think leaks also come into it as well. So as you said in your intro, about a fifth is lost through leakage. So that has a big impact on the demand levels as well.
So what does it take to actually fix this broken system?
So I think it's fair to say priorities have changed. Some of the water industry and regulators are sort of waking up to the issue a little bit more now. So there's a big program of investment coming through. We need more reservoirs. We need more water transfers from the west, which gets a bit more rain, over to the drier, more heavily populated east. And also, you know, some of those water-saving methods at home, so soakaways, so that we can flush our toilets with grey water and things like that, better building regulations, building standards, and easier planning for things like reservoirs, which have been blocked. So there's a big program of investment coming through. Unfortunately, bill payers will pay for it. The industry is privatized, so it's going to come through to the consumer, which is not great timing.
Yeah, so I was going to say, how much is it the responsibility of you know, private companies, and how much is it the government? Like, who do you blame for this?
Yeah, so I think ultimately the private companies they're sort of contracted out, and they're regulated by the government to provide the services. So the way it works is the water companies sort of have to apply to their regulator Ofwat to say, can we charge our customers this much? And then we plan to put this much money into investment. And I think what's been happening over the past few years is the signals have just been wrong. The signals coming from government and from the regulator have been, let's keep bills low, let's, you know, the status quo is fine, and there hasn't been enough making things fit for the future and thinking about that big future risk from climate change.
And Olivia, is this a real template for other countries when you look at the UK and you think, I mean, maybe it's a wrong perception, but because the UK has plenty of water, also because it's an island, does it make other countries think twice about how they manage this gorgeous resource?
Yeah, I mean, I think Britain has been a little bit more, has thought about it a bit less closely than, say, somewhere like the Middle East. So if you look at something like desalination, there's a lot of that goes on in the Middle East. If you look at California, you know, they're very aware of their water stress. So, you know, I think in a way, like, Britain is kind of a victim of its weather patterns and the fact that it hasn't had this long history of water stress that other places have. So, it's probably a cautionary tale in that sense for maybe parts of Europe, because I do think that this is probably an undervalued issue in other parts of the world as well.
All right, Olivia, thank you so much for some great reporting. Olivia Woodgard there on water in the UK. Now, we'll be covering all things UK every week on Thursdays at 9:30 a.m. London time, also in our half-an-hour UK special. Coming up, we take a look at European inflation figures with CPI readings from France and German states. Also, Italy's due shortly. That's next, and this is Bloomberg.
Young person who might like to have a career like yours, what would you recommend? How can you prepare to be the National Security Advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, big day for European inflation data. We've had France and several German states give CPI readings this morning. Italy also reports their CPI data in about 10 minutes as the country's central bank governor delivers a speech today. Well, joining us now is Bloomberg's Oliver Crook in Berlin, Chiara Albanese in Rome. So let's start with you. Ollie, when you look at some of the important inflation data, they're all pointing to the same thing, is that there's actually a slowdown in inflation overall.
Correct, and that's what we've seen this morning out of many of the German states, namely North Rhine-Westphalia, which is the biggest state in Germany. It's about the size of the Swiss economy, so we're going to take a look at that, breaking it down a little bit to see kind of where the inflation came through. So the good, the bad, and the ugly. Well, let's start with the ugly first. Food and beverages still up 15%. That is down from 17%, however. So that is, we can call that improvement. But however, you look at alcohol, tobacco, you look at leisure costs, all this stuff is still being supported. So the services side of the economy, people are still spending money. still elevated at around 10%. However, for the good, you go to the energy sector, up only 0.8%, which is great. And then down from the transportation side, it actually is the only category that year on year has gone down. And that is because the German state has rolled out this month the 49 euro ticket, which has sort of has a disinflationary impact, which is a subsidy to all train travel. However, starting next month, you'll get the base effect from last year's 9 euro ticket, which was a massive subsidy. So you're going to see that bringing the inflation right back up in June.
So, Ollie, when you look at recessionary prospects for Germany, how's the job market holding up?
Yeah, so we've had some pretty bad data in a lot of the German economy. We've had PMI that's been in contraction since July of last year. On manufacturing side, industrial production is not great. GDP, as we know, last week we went into recession. However, the job market has held up. We just got jobless claims today that were stronger than we had anticipated, only 9,000. The unemployment rate has stayed at about 5.6%. So really the question is, will we be able to get a substantial kind of reduction in inflation while this labor market is still holding up? IFO, however, out with a survey yesterday saying that real estate firms and housing firms are considering job cuts. So they may not be coming in, but they're thinking about it. And they're also saying that in the services sector, which has upheld a lot of the economies throughout Europe, we're seeing that there is confidence diminishing there. So perhaps the labor market softening in there as well.
Ollie, thanks so much. Oliver Crook there in Berlin for us. Chiara is our Italian politics expert. So, Chiara Albanese, when you look at the inflation prospect in Italy, how different is it from other European countries?
Well, thanks, Francine. Clearly, inflation in Italy continues to be an issue, but at the same time, the economy is also doing quite well. We had the economic data today, which came through slightly better than expected, and that continues to be favorable to the government and to Giorgia Meloni. Again, today, the Bank of Italy governor, Ignazio Visco, he's outgoing out of his mandate. He's delivering his final annual speech, and clearly having a strong economy, even in spite of a quite high inflation, allows for some leeway in terms of the policies that are going to be taken, and also investors' confidence that the government continues to more or less keep the big mammoth debt that Italy has under control.
So, Chiara, first of all, who's likely to replace Ignazio Visco? And is this really going to be the most important appointment for Giorgia Meloni?
Well, Giorgia Meloni clearly has all eyes on her in making this choice. She still has a few months before she will decide. So a few names have been touted, but we're nearly not close enough to really have a short list of names. But the political debate is going to be furious around that topic. Now, that will be a defining appointment that Meloni will have to make, and she will definitely have to make sure that she's able to control the pressure from political parties and stakeholders in the choice.
All right, Chiara, thank you so much. Chiara Albanese there in Rome, of course, one of our star politics reporters. Now, let's also take a look at some of the things that the markets are watching out for today. As we've been discussing, we have a host of inflation data from across Europe, including a provisional reading of Italian CPI for May. That's at 10 a.m. UK time. At 1 p.m., we'll get a provisional reading for Germany CPI. 3 p.m., it's U.S. JOLTS, job opening releasing for April. And then at 7 p.m. UK time, the Fed publishes its latest beige book giving insight into economic conditions across the U.S. Well, Bloomberg Surveillance Early Edition continues in the next hour with Kriti Gupta in New York, Anna Edwards here in London, and this is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. One step closer, the U.S. House plans to vote today on the debt ceiling bill after clearing a key procedural hurdle with just days remaining to avoid a default. China's economic recovery weakened in May, raising fresh fears about the growth outlook. Calls are rising for more central bank action to counter the downturn. Plus, an exclusive with Jamie Dimon. JP Morgan CEO talks China, the debt deal, and his long-term future beyond leading the banking giants. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. And Kriti, it seems that the weaker sentiment coming out of the Chinese data print weighing on investor thinking this morning here in Europe.
Yeah, now that you have the debt ceiling potentially out of the way, look, it's not a done deal just yet, but potentially out of the way, it feels like the market isn't necessarily diving into that relief rally that a lot of people expected for the exact reason, Anna, that you mentioned. Some of that sentiment that you're seeing in Europe perhaps folding over into the United States as well. We're not looking at S&P futures this morning. We're looking at NASDAQ futures, which I should say are rising at about the same margin as S&P futures. And that is important because breadth is an issue in this market. Futures, NASDAQ futures lower by about 0.2%. Well, again, it comes down to breadth because a little fun fact from our markets extraordinaire producer, Dan Curtis, Anna, get this, we are at the worst breadth when it comes to market gains for the S&P 500 on the month, going all the way back to 1989, which really speaks to that tech leadership. And that's why the NASDAQ futures contracts are, I would argue, a little bit more important than S&P futures simply because of that tech outperformance we've seen in the last few days and weeks. Blame AI, blame the defensive positioning. We'll dive into all that. But what you need to know is they are down about 0.2% as well. The 10-year yield down as well, only by 2 basis points, though. The bond market catching a little bit of a bid. So you are, again, seeing that defensive positioning show up in the bond market, again, based on those growth worries. And a similar trade is showing up in the dollar as well, stronger by about 0.4% on the Bloomberg Dollar Index. Again, if you were concerned about recession around the corner, Anna, you're going to see that show up in commodities. And NYMEX crude, again, trading below a 70 handle, 69.06 on that contract, down about 0.6%. But to your point, it really does all kind of come back to the Asian story. And that's really where this kind of low risk sentiment really kicked off overnight. You saw that not only in the Chinese markets, but in the Japanese markets as well. The Nikkei down about 1.4% overnight. The Hang Seng really taking a tumble down, just shy of 2% there. Remember, the Chinese stock markets have been on that cusp for a bear market for a while, really keeping an eye on that. But again, it's showing up in the currency market as well. This is a cross-asset global story, Anna. Dollar yuan, you are seeing the weakest levels on the offshore yuan that you have seen in about 12 months. So you're seeing 7.12 on that exchange rate. And again, some weakness in the Japanese yen as well, down about 0.1%. Interesting, Anna, to see Japan, China, and now U.S. futures all on the same page this morning.
Yeah, absolutely. And here in Europe, we've got negativity to report as well, Kriti. So this is the risk-off picture for European stocks. Off earlier lows, though, if I can add that slight element of positivity into the mix. But we're down by 0.1% or so in London, 2 or 0.3% to the downside over in Germany and in France. And we have weakness then across European equities. We are seeing selling of stocks and buying of bonds, buying of the dollar, those big themes dominating trade today. But not too much selling now on equities. I put in euro and the German 5-year yield as we've got some interesting rethinking going on around the inflation story in Europe and what that means the ECB will have to do. We're seeing traders pull back their expectations for just how much hiking we'll get from the ECB, and all of this on the back of data that's come out from various parts of Europe that has been better than expected. So that's lower than anticipated in terms of the inflation prints. That was the case in all of the German regions we've heard from. It was the case in France. It was the case yesterday in Spain. It was not the case in Italy, though. The Italian inflation rate just coming in at the top of this hour fell to 8.1% in May. The estimate was for a drop to 7% 7.5%. So moving in the right direction, not as much as had been expected, though. Germany's Saxony, that regional number, though, keeping with the trend. Prices month on month falling by 0.3%, and the prices year on year rising by 6.5%. So once again, we're seeing there this trend of inflation prints coming in lower than had been expected. So that means the ECB maybe doesn't have to hike so much. Here's SBB. That's what we call it when we certainly can't attempt. Our Swedish is not quite up to managing to pronounce the entire name of this real estate business over in Sweden, at the heart of the real estate issues that we're seeing there. And we've seen a parent business of this company, or a parent business of this company, has managed to miss one of its debt payments. It's not a default. This is a hybrid instrument, so this is flexibility they are able to have, but it didn't mean good things for the stock. And Brent crude down by 0.6% this morning on the back of a decent drop yesterday, 4% weaker on WTI in yesterday's session, Chrissy.
Certainly something we're keeping an eye on. I admire you for sticking with the SBB. I wouldn't even want to admit that I couldn't pronounce or even try to pronounce the Swedish real estate company. We thank you, as always, Anna, for that update. Let's talk a little bit about the macro story when it comes back to stateside, because, look, we're not over the hurdle yet, but we're almost there. The debt limit deal struck by President Biden and Speaker Kevin McCarthy is heading toward a vote today in the House. In a Bloomberg exclusive interview, JP Morgan CEO Jamie Dimon says he's hopeful it will pass.
So I wish that one day we get rid of the whole debt ceiling thing, but I understand when, it's a democracy, people have different opinions about what we should be doing, and it's just one tool for one party to, get the other party to the table. So I'm quite optimistic there, and I really do applaud the fact that they all sat down, spoke, got something done.
Joining us now, Bloomberg senior editor Bill Ferries, who formerly covered Washington for years. Bill, how confident are we that this is a done deal? For our international audience, talk to us a little bit about the developments from last night.
Well, everything's certainly headed in the right direction. I mean, you have the Speaker of the House, Republican Kevin McCarthy, and the top Democrat in the House, Hakeem Jeffries, basically scheduling the vote potentially as early as Wednesday evening. That signals confidence that they're going to get it through, even as they acknowledge that they're going to lose people who are essentially to the left of President Biden and to the right of Speaker McCarthy. They just don't believe that will be a critical mass able to stop passage. Then it goes to the Senate, and there each individual senator has a lot more influence over whether this passes or not. Everything looks like it will pass, but I think this could still very well go to the last minute. I mean, we're talking about a Monday deadline for the U.S. to hit the debt ceiling. It wouldn't surprise me if this bleeds into the weekend, if this perhaps final legislation goes to President Biden's desk on Sunday. But everything points to this heading towards the conclusion I think markets and most lawmakers would like to see.
Yeah, with cameras trained on Washington, then, Bill, there's still time for some lawmakers to want to make a noise, isn't there? In terms of what happens from here, is Speaker McCarthy's job now at risk, given the frustration that we've seen among some conservative members of his party?
Yeah, there's definitely members on the right who are really frustrated at how this agreement was reached and what the terms are on some of the really difficult issues. Kevin McCarthy, it took 15 rounds of voting for him to become speaker. But during those 15 rounds, there was really no other viable candidate. So the problem Republicans who are opposed to McCarthy have is that they would have to replace him with someone. There is no candidate for that job right now. So I think for right now, unless he makes other decisions in the coming months or over the next year or so that really frustrate a bigger group of conservatives, I think his job is likely safe for now.
Bloomberg's Bill Ferries keeping us up to date on the minute-by-minute developments of this debt deal. Again, we are almost there, but not quite. We thank you, as always. And, of course, in the absence of that finiteness, for lack of a better term, you are starting to see the market really pivot to the other major story, which is China. China's manufacturing activity contracted for a second straight month in May. It's more evidence that the post-COVID recovery has slowed in the world's second largest economy. For more, let's bring in Bloomberg economist David Chu. David, what's your reading on the latest data set here? Just how much trouble is not just China, but the global economy in right now?
Yeah, I think so. The data today showed us that the recovery is losing some steam, especially in the manufacturing side, as we have seen the manufacturing PMI in the contraction territory for 2 consecutive months. That means that because the manufacturing sector has been the major engine for China's economy during the past 3 years in the pandemic period. But now it seems that it's losing steam. On the other hand, we have seen the servicing sector related to travel and the catering, and all the sectors related to the reopen the economy are still strong. But at the same time, the housing sector is sending some worsening signals, especially with the indicators, the sub-indicators in this sector is still in the contraction range.
Okay.
That tells us that the recovery is not balanced. So we still have a lot to do.
Okay, yes, so an important data set then being released today on China. David, JP Morgan CEO Jamie Dimon spoke exclusively to Bloomberg earlier at the bank's Global China Summit in Shanghai. Let's just have a listen to what he had to say about the China-US relationship.
Over time, yeah, there'll be less trade. It'll take years for these things to take place, but it won't be a decoupling. And the world will go on.
So not a decoupling, he says. The focus, of course, is on de-risking. That's the language that's being used now by the US administration time and time again. What do you think the Chinese government wants to do on this particular front then?
Yeah, definitely China benefited a lot from the globalization and the increase in global trade. So that definitely China wants to keep the door open for global trading. But on the other hand, geopolitical things have become more and more tight than before. So I think it is a more realistic way for China to seek more support from the domestic market for the growth in the future. So I think China the government is already doing something to boost the domestic consumption. But to be honest, it won't be easy because if you look at China's GDP, the domestic household consumption takes merely below 30% of the GDP, and the government side and the investment side takes more than 60%. So that it means that there must be some structural reason that weighing on the consumption. So it means that the government has a lot of things to do to release the power of the consumption.
David, thanks very much. David Chu, Bloomberg economist there in Hong Kong for us. And now let's pivot from the Chinese economic story to some macro data out from Europe today. It's a big day for European inflation data. France slowing more than expected on the inflation front. Italian inflation coming out higher than expected. Several German states give CPI readings this morning, and we've got most of those, and they've all come in slower in terms of inflation than had been expected. And we get the national reading later on today. Let's get now to Bloomberg's Maria Tadeo in Brussels. Maria, take us through some of the data here, because if we look at Spain yesterday, France and Germany, we get quite a clear picture.
Yes, and it may be pointing to a cooler summer of all things. When you look at the data that came out today from the French economy, you see again this deceleration in prices. The finance minister, by the way, telling the French radio that prices are in fact coming down fast. The central banker also suggesting perhaps inflation now past peak in the French Republic. When you look at the Spanish numbers that came out yesterday, a lot of people focus on Spain as a forward-looking indicator, also significantly cooler for May. Germany, again, we don't have the full number, as you said at the start of the show, but the numbers that we see so far may point again to cooler inflation too in the biggest economy in the euro area. Italy, a little bit of an outlier, as it is at times. Growth was better than expected. Inflation did cool, but not by as much as expected by economists. A lot of this, Anna, now provides a picture, or could provide a picture for the big euro area number that we're expecting tomorrow on Thursday. Now, if you put them all together, you could believe or suggest that, again, this cooler inflation will be reflected on the overall number, and tomorrow there could be some relief for the ECB if indeed that manifests in the broader euro area number.
Maria, what does that mean for the ECB, especially in light of the potential changing of the guard we might get over at the Bank of Italy? Put this into context for us.
Yes, and look, whether or not there's a new governor in the Bank of Italy, I doubt very much that it will change the impressions that we hear from Visco, who is the governor of Banca Italia at the moment, who has said, yes, of course, we need to hike rates. Inflation is an issue, but also not be too abrupt to strangle the economy. Now, beyond that, when you look at the European Central Bank, we know that they will continue to hike rates. They have said that clearly. When you listen to the words of Madame Lagarde, you know there's more to come, but it's also clear that they have entered the final stage. The question is by how much? When you see the numbers today, you see that reaction from the market already pared back that cumulative 50 basis points bet, and of course there is a decision expected in 2 weeks' time from the ECB, the June meeting. I cannot believe we're in June, by the way, already this fast, but of course the focus will be on the downshift to 25 basis points already done. What comes next?
Okay, not quite. The 31st of May, I think, Maria, but almost in June. Your point is well made.
Every day
Where did
counts.
that time go?
Every day counts.
Every day counts. I'm not saying goodbye to May that easily. Maria Tadeo, thank you very much for the latest on the inflation prints out of Europe there in Brussels. Now, coming up, we will speak to the economist Sarah Kewen of Standard Chartered and FX strategist Jane Foley of Rabobank. Lots to talk about the Chinese growth engine, about the inflation prints coming through in Europe. Lots to discuss, plus more from our exclusive interview with Jamie Dimon as he hints at life after JP Morgan.
I love my country, and maybe one day I'll serve my country in one capacity or another, but I love what I do. I think JP Morgan do a great job for helping Americans, for helping countries around the world, and this is my job.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compaq merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
Studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Look, one of the big questions here is now that kind of this easy monetary policy era is in the rearview mirror, what does that mean for the credit markets? You have a little bit of tightening there, but yet you've had a lot of folks perhaps come to market, not just here in the States, but in Europe as well. For our radio audience, bear with me. We're looking at a chart here, a bar chart of total May issuance in billions of euros for the European bond market. Now, we've seen issuance really boom, the highest amount of deals going going all the way back to 2020 when we did have that easy monetary value. I wonder what that means. Is that a signal that a lot of corporates, a lot of kind of funds are perhaps making that dash for cash before things get even tighter? Or is there something else to it? Let's bring in a true expert here. Donna Baltaji, one of our markets editors, joins us with some clear context. Donna, what are we looking at here? What does this really mean?
So we're looking at two things. One, we're seeing issuers that are finally come to terms with the fact that you've got to sell when the market is ready for you to sell. So you can't wait for better pricing. What you really have to wait for is for that cash to be ready to be deployed by investors. And from the investors' point of view, what we're basically seeing is that they are understanding that with the risk of recession on its way, that these very high rates might not last forever. So if you can lock in those rates now, you're probably set for a few years.
So that's interesting. That's driving things on the investor perspective. Dana, good morning to you. But in terms of these corporates, you say that they've learned they've got to sell when they can, sell their debt when they can. But there's also perhaps a window here before we see a lot more T-bill issuance. Is that something that's going through these treasurers' minds when they think about when they raise money?
Oh, absolutely. I mean, we're basically expecting a flood of these T-bills. And what that will basically do is that will raise borrowing costs, not just in the U.S., but around the world. And when you have that, plus central banks that are also raising rates, the hit on borrowing costs can be significant. So for that reason, it's a good deal for the issuers, but it's also a good deal for the investors themselves. Bear in mind, though, the summer is on its way, and in the summer, everything slows down. So you got to sell when you can.
Okay, Dana, thank you very much. Dana Elbataji joining us there with the latest on credit markets. And for more market analysis, check out MLIV Go on your Bloomberg terminal. This is Bloomberg.
That move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very carefully.
Nobody covers business like Bloomberg, your global business authority. The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. We're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. makes. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Now keeping up to date with news from around the world, here's the first word. North Korea has confirmed that an effort to launch a military spy satellite into orbit failed earlier today. The official news agency reported a rocket crashed into the Yellow Sea after losing propulsion in the second stage of the ascent. The launch initially prompted missile alerts in both Japan and South Korea. Pyongyang says it will attempt another launch soon. Elon Musk has told China's foreign minister in Beijing that the interests of China and the U.S. are intertwined, echoing recent remarks from the bosses over at Apple and Mercedes-Benz. The Tesla chief met Qin Gang on his first post-COVID visit to China. Musk is expected to tour Tesla's Shanghai factory later today. Theranos founder Elizabeth Holmes has reported to prison to start her 11-year sentence for defrauding investors over the company's unreliable blood testing technology. A federal court convicted Holmes of wire fraud and conspiracy last year, with her final appeal failing last month. The 39-year-old is being held in a minimum security prison near Houston. Goldman Sachs is said to be considering another round of job cuts as the deal-making business remains slow. Sources say the third round of cuts will affect less than 250 people and will include the firm's more senior employees. Earlier this year, it had eliminated about 3,200 positions, embarking on one of its biggest rounds of job cuts ever. Anna, things are really heating up in terms of the cost efficiency story. Now on Wall Street, it felt like those rounds of job cuts that you saw among perhaps junior bankers, even mid-level managers, wasn't necessarily going to seep up to the higher levels. But Goldman Sachs, Lazard, even First Republic, although that was a more micro story, really feeling the pains across all ranks.
Yeah, absolutely. We've been seeing this within investment banking for some time, haven't we? From other banks and also from Goldman Sachs. And we heard at the beginning of the year a big round of cuts over at Goldman Sachs. This time, to your point, Kriti, things are going higher up the food chain. More senior, it seems, are the people who are going to be going this time, but fewer in number. So not the sort of thousands this time around, maybe 250 or so people. But of course, we'll continue to monitor these stories carefully for you. Coming up, we'll get back to the macro themes, though. Sarah Kewen, head of research for Europe and Americas at Standard Chartered, joins us. What is her thinking? What is her team's thinking around where the Fed heads next? What is in the driving seat? Is it the Fed? Is it the debt narrative still? We'll also talk about some of the data coming out of Europe today. Really interesting the way that the inflation prints have almost consistently come in below expectations. What does that mean for the ECB? This is Bloomberg.
Every art institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live. And it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
A multi-trillion-dollar industry. There's a lot of ground to cover.
A record year of growth, hand over fist all year.
We're just getting started.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Today on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. One step closer, the U.S. House plans to vote today on the debt ceiling bill after clearing a key procedural hurdle with just days remaining to avoid a default. China's economic recovery weakened in May, raising fresh fears about the growth outlook. Calls are rising for more central bank action to counter the downturn. Plus, an exclusive with Jamie Dimon, JP Morgan CEO, talks China, the debt deal, and his long-term future beyond leading the banking giant. I'm Kriti Gupta in New York with Anna Edwards in London. Anna, a lot to digest here, but it very quickly feels like the narrative shifted from debt ceiling panic now to Chinese growth panic. What are you seeing in Europe?
Yeah, absolutely. We got the data from May, didn't we, for the Chinese economy, and that gives us a substantial insight into the second quarter in China, the world's second largest economy, and things not looking as rosy as had been expected there. Certainly on the manufacturing side, although that is a bit of a global story, but certainly on the manufacturing side, that disappointed in China, and that weighs on sentiment here in Europe. We're off earlier lows, if I can add that little area of brightness, but still we're down by 0.2% on the Stocks Europe 600. Here in Europe then, Chrissy, we've had some really interesting inflation data coming out from Spain yesterday, to France today, to the German regional data. We get the national data from Germany later on. All of that adding up to a reassessment of just how much hiking we're going to get from the ECB, because all of the data suggested some work has already been done in bringing down inflation rates. Italy was a little bit different, but leaving Italy aside, we see that reassessment taking place, and the euro down at 106.70, down 0.6%, and we see those bond yields are falling 8 basis points or so on that 5-year Bund, but certainly that is the direction of travel that we have here. Brent crude is interesting as well, thinking of deflationary forces. This is being weighed on by that sentiment out of China, then, Chrissy, down by 0.8% on the oil price, and that follows a big 4% retreat in WTI yesterday. A lot of concern about demand for these commodities.
Yeah, it's going to be, I think, a rising concern, Anna, as we talk again about those recessionary concerns. How quickly does that inflation story that we are still battling, by the way, on the monetary front turn into the R word? And I think a lot of that concern is coming out of Asia. To your point, Anna, something that's, to your point, again, driving the European story. Well, sentiment is kind of seeping into the NASDAQ futures as well, which is interesting because buying big tech has been the trade du jour over the last, I want to say, 7 to 10 days or so. NASDAQ futures right now, they're taking a little bit of a breather, down 0.2%. And I should say, even on the micro front, you're seeing that in, for example, NVIDIA shares, even in the pre-market, taking a little bit of a breather alongside all of the names that have really been catching a big bid in the last 10 days. The 10-year yield also dropping a little bit to the tune of about 3 to 4 basis points. Look, it's important to note that the bond market is catching a bid, despite the fact that the debt ceiling deal isn't 100% through. So really keep an eye on that kind of relationship between the stock market and the bond market, or I should say the lack thereof, Anna. The bond market, though, if you're seeing a defensive play there, is showing up in the FX market as well. The Bloomberg Dollar Index stronger by 0.3%. The positioning is going to be crucial here. We're going to talk about that with Jane Foley in just a few minutes. And of course, NYMEX crude, to your point about the commodities trade, we're coming full circle, 68 handle on that contract, Anna.
Yeah, 72 handle on Brent. Let's think about where we go on the global growth story. Sarah Hewitt joins us, Head of Research for Europe and the Americas at Standard Chartered. And let's start then, Sarah, with the data we had out of China and what that has done to add to your understanding about the weakness in growth, in particular in manufacturing, and crucially, what can be done about it, or who you would look to try to do something about it.
Yes, it's very clear, particularly the heavy industry manufacturing is doing worse than expected. The PMI data came in below expectations. On the non-manufacturing side, I think we saw some positive signs, particularly for hospitality. So consumption for services seems to be holding up pretty well. Perhaps a little bit more optimism on the construction front as well. But clearly, manufacturing is soft, and the export outlook as well seems pretty bleak. Overall, it's not a great picture, although we are seeing, as I say, some recovery in consumer spending on services, albeit potentially at the expense of spending on goods. What happens to policy from here? We're still somewhat cautious about expecting further policy easing. There is already a fiscal stimulus in place. I think Beijing is anticipating that there will be more momentum going forward, but they will be watching very closely what's happening to consumer sentiment, which remains very sluggish in the face of still high unemployment, particularly amongst younger people in China.
Sarah, connect the dots here for us, because I think it's been a couple of years now where we've really seen the monetary policy story shift between, say, the PBOC and the Federal Reserve, and arguably the ECB somewhere in between there. That shift that you start to see between the two major economies in the world, or the two largest, I should say, do you start to see them kind of coming back together, the PBOC and the Federal Reserve perhaps joining together to become on a more stimulative page?
Well, certainly for the Fed, our view is that we're at the peak in rates in this cycle, and that the next move will be for rates to come lower, potentially later this year. So I think it's perhaps too early to talk about stimulus from the Fed just yet. We are still getting some pretty punchy inflation numbers. The jobs market is still very strong in the US, and that needs to shift before the Fed will be comfortable with, confirming that they're on hold, let alone before they start to cut rates. But we do think that we'll have a slowdown in the economy later this year, unemployment starting to rise in a meaningful way, and despite the latest core PCE deflator coming in above expectations, we think that inflation pressures broadly are on a downturn. We're watching very closely what's going to happen to average hourly earnings this Friday with the employment report. They obviously sort of picked up more than expected in April, but if we get a return to what we saw in the first quarter, then that sort of earnings growth is consistent with inflation moving back to target. So it does open the door, in our view, for the Fed to start to cut rates at around the turn of the year, in which case you'd see accommodative policy from China, policy staying restrictive in the US, but moving towards a more accommodative stance over the course of the next couple of years.
And Sarah, so that's on the monetary side. Let's talk about the fiscal side specifically. We've kind of gone over a little bit of the details of the debt ceiling here, and essentially the cap on fiscal spending for the next 2 years, although I should mention defense spending is actually going to increase. Sarah, over the next 2 to 3 years per se, what is the bigger factor here? The debt agreement or the fiscal budget in the US, or perhaps the geopolitics and the domestic spending from the Biden administrations? What factors as a bigger role into US GDP?
Quite honestly, all of the above. But if we take them each in turn, then agreeing the debt ceiling and agreeing that will be sustained through the next year or so and beyond the next election is going to be positive in terms of sentiment. We did have some hints that consumer sentiment had suffered as a result of the uncertainty over the debt ceiling. So an agreement, assuming that does go through Congress today and by the weekend, then that's positive for sentiment. There is a fiscal squeeze in place. Consumer spending, government spending, discretionary spending is going to drop back to 2022 levels. Now, bear in mind, of course, that as a share of GDP, that will still leave government spending higher than it was in 2019. We have had a big run-up in government spending through the pandemic, so not all of that is going to be going away. We may see later this year some further headwinds as a result of the agreement on restraining spending, and that may well coincide with a period when we have softer economic activity generally. Over the next couple of years, then I think that some geopolitics will probably be in focus.
And Sarah, a word on the ECB. Has your thinking been informed, shifted at all as a result of the inflation prints we've had over the last couple of days from Spain, from France, from the various German regions, all coming in below estimate?
Yes, it's moving in the right direction. To an extent, seems to be down to food inflation moderating. It's still high, but moderating more than expected. We'd be cautious about reading too much into 1 month's figures, of course. Our own view on the ECB, though, is that we don't think they're going to be raising rates as much as markets expect from this point. There was a clear signal from Lagarde that they still have more to do, but we think that by the summer we will be getting further indications of moderating inflation. The real uncertainty is what's happening to wages, and we know that that's where policymakers, both in the US and in Europe, are concerned that we enter a wage price spiral. Maybe there's more concern still on that in Europe than there is in the US, which is why we think the ECB still has more work to do, whereas we think the Fed has probably done enough.
Okay, more hiking still to come then. Thank you very much, Sarah. Standard Chartered's Sarah Hewitt joining us there with the latest on various economies around the world. Coming up next, we'll talk to Jane Foley, Head of FX Strategy at Rabobank. We'll get a perspective on currencies next. This is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Look, we're talking about growth all of a sudden, and the best way to look at where people are really thinking about this is in the FX market. There's really no place to hide in this particular asset class, which brings me to a positioning story I want to bring to your attention. Anna, we are looking at specifically just this bet into the dollar. Now, this kind of made sense as we were talking about the debt ceiling debate, the idea that in this kind of potential global catastrophic doom and gloom scenario of the U.S. defaulting, why not buy America as kind of this defensive trade, the irony, the paradox of that. Nevertheless, you are starting to see a lot of folks really be long dollar when you look at speculative positioning. But the question is, in a decelerating growth environment, is that still the trade? Let's get a little bit of expertise here. Joining us now is Jane Foley, head of FX strategy over at Rabobank. Jane, talk to us about this dollar positioning. If we're worried about Chinese growth momentum kind of declining and that really accelerating the recession that we've expected to be around the corner for the last few months, arguably years, is this dollar trade something that makes sense?
Oh, absolutely. In fact, there's pretty good inverted relationship between the dollar and high-risk assets, say emerging markets, equities, for instance. And the reason being is that, you know, if you really want to buy risk, well, you generally sell the dollar and vice versa. And of course, right now, we're facing quite a lot of headwinds. First of all, the Chinese growth story, clearly that's been a major disappointment this year. At the start of the year, there was so much optimism about the outlook for China, that rebound story from the COVID lockdowns. That is disappointing. On top of that, there's the risk of US recession. And of course, for the Eurozone, well, there's a likelihood that they're facing stagnation in the second half of this year. So you've got a pretty disappointing outlook for growth, not an environment where you really want to be piling in en masse and into high-risk assets, and therefore the dollar is likely to do well in this sort of environment.
So a lot of headwinds, Jane. I'll pick up on the European one there. Stagnation in the second half of the year, you say, perhaps. We've seen, of course, recession in Germany, other parts of Europe perhaps managing to avoid that fate just yet. What are you expecting to see in terms of the euro then and how it trades through that?
Well, you know, the euro is approaching all of these headwinds with the market position really quite long. And, you know, the euro had a really good run, say, from around October last year, you know, right up until a month or so ago. And this was built around, you know, the hawkish story from the ECB, which now is come to an end. We're seeing the market pricing out some of those last bit of tightening. But also the Chinese story plays into the European recovery story, or it did, because, you know, China is Germany's largest export partner. And we've heard, you know, China or Chinese consumer, you know, they're buying less goods, a little bit more in services, but less goods. They buy a lot of German cars, a lot of German machinery, etc. So that feeds back into a disappointing Eurozone story. And certainly last week, if we looked at those PMI data, the new orders for the manufacturing sector in Germany, they were really very disappointing. So we've got the market positioned long on the euro. And what have we got now? Well, the ECB, we're seeing weaker than expected CPI data, and the scenario where Germany did have a technical recession over the winter, and we've got stagnation. So I think for the euro, the market's probably reevaluating why it's holding those long euro positions right now.
Right, so the long euro position then in contrast to the news flow. So Jane, how many hikes do we get from the ECB from here?
Well, our official view is still that we will get two. I mean, again, we've seen some good data insofar as it is coming off the boil in terms of inflation in the Eurozone, but it is only 1 month. And we've got to keep an eye on the core numbers too. And some commentators are expecting that core could remain sticky over the summer. Remember, in parts of Europe, you know, that will be the tourism season. So, you know, we've got to keep an eye on it. But I think most people would agree is that we are coming towards the end of that cycle. And it is very unlikely that the market's going to start pricing in more ECB interest rate hikes. In fact, if you look back over the last few weeks, there's been plenty of hawkish commentary from the ECB in that period, but the market, or the euro, wasn't reacting to it. I think everyone is sort of understanding we're coming to the last part, to the last leg, if you like, of that tightening cycle for Europe.
Well, Jane, we've talked about the dollar, we've talked about the euro. To continue our kind of journey around the world, let's talk about the Asian currency specifically. We're seeing notable weakness in the offshore yuan this morning and the Japanese yen. Is this something, as geopolitics kind of re-enters the conversation and the macro trade, something that clients are asking about as kind of this weakness in Asian FX, perhaps incentivizing trade a little bit? How do you think about something like that?
I think these are very two distinct stories. I think for China, it is the weakness of the economy, the disappointment, if you like, from this bounce that we're seeing. And what's really happening as we see the disappointing growth data, the market's beginning to focus more on the flaws of the Chinese economy. You know, the fact that households are highly indebted, the fact that the regions or the local governments are highly indebted, the fact that they've got a bad demographic, as we do, of course, in Europe as well. So the market's focusing more on the flaws. It's getting very disappointing, disillusioned, if you like, about the pro-Chinese story that a lot of people were more excited about again at the start of the year. So the risk that they could have more loosening in policy as the market's thinking about potential for more tightening from the US over the summer is really what's weighing on the renminbi. But for Japan, it's something different. We did have yesterday that emergency three-party meeting between the Japanese authorities, and that put the risk again, or the talk of, are they ready to intervene? Are they just putting a shot across the bows with respect to intervention? That's there. And at the same time, the market is thinking, you know, is July on the table with respect to a change of yield curve control? So there's different aspects, if you like, going on in Japan than there are in China.
Jane, thanks so much. Thanks for joining us from Rabobank. Jane Foley with her views on the FX markets. Coming up, we'll get back to our interview with Jamie Dimon. He expresses optimism on the US debt deal. We'll bring you more from our exclusive conversation with the JP Morgan CEO next. This is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. You know, lots of testing, lots of thinking about what could go wrong, lots of research. You know, when I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Now, with just days to avoid a US debt default, the debt limits agreement is headed to the House for a full vote today. JP Morgan CEO Jamie Dimon spoke exclusively with Bloomberg's Stephen Engel about the deal.
You know, America, the financial system of America, and the economy of America, it's still the most prosperous and largest economy the world's ever seen, the most innovative, the most growing, and the rest of the world relies on it. You know, so I think we shouldn't create any instability there. So I wish one day we'd get rid of the whole debt ceiling thing, but I understand when, you know, it's a democracy, people have different opinions about what we should be doing, and it's just one tool for one party to, you know, get the other party to the table. So I'm quite optimistic there, and I really do applaud the fact that they all sat down, spoke, got something done.
What's your read on inflation, on whether the Fed will go beyond the pause and hike again?
You know, my simple view is that, you know, they're right to pause at this point. It's been a big increase, you know, 500 basis points or so. Take a pause, but I do think it's possible they're going to have to raise a little bit more. That, you know, inflation is kind of stickier. I think people are coming around to that, which means rates may have to go up a little more. People should be a little prepared for that. It's just as a matter of managing your own business, be a little prepared for that. Whether you're a financial company or a real estate company, et cetera. I think the other thing I'd be a little prepared for is the volatility that might very well be created by quantitative tightening. We've never really had quantitative easing, which we've had now for, you know, the better part of 15 years. And now you're going to see quantitative tightening, and I think the effects may be a little harsher than people expect, but hopefully we'll get through all of that and I'll be okay.
That was our exclusive interview with JP Morgan Chairman and CEO Jamie Dimon, a wide-ranging conversation. He talked about the debt ceiling. He also talked about his future. Worth looking up the rest of that conversation on the Bloomberg terminal. Now let's get a look at some of the things that are ahead for us today in the calendar. We will be getting the national report for German inflation at 8 a.m. Eastern Time. Key U.S. data due today includes Chicago PMI and JOLTS data, job openings, of course, out of the U.S. And that, of course, comes ahead of the jobs report, which is due on Friday. We're going to be speaking to a host of Fed speakers, or hearing from them throughout the day, with Collins, Bowman, Harker and Jefferson all on deck. So lots of Fed speak. And all of that is leading up to the Beige Book. That'll be released at 2 p.m. Eastern Time. Critty?
Yeah, and of course, as we look at the macro, we're going to keep an eye on the micro as well. Some of the stocks we're watching in the pre-market already catching some of a bid, because even though on the macro front we do see a little bit of a pullback, a lot of that pullback is driven by the very stocks that took us to those highs in the first place. NVIDIA, AMD, of course, those high-flying chip maker stocks that have really caught a lot of attention in the last week or so off the AI bid, pulling back just a little bit. But look, NVIDIA shares still trading at about $3.95 a share, down about 1.3% for both NVIDIA and AMD, especially as AMD's Narode sells about $3 million of its shares. So really keep an eye on those insider moves. And of course, it all comes back to the AI story. And a C3 AI, we're going to call our small cap poster child. They are reporting results after the market close, but kind of in character, shares are up about 3% already in the pre-market. So we're going to talk to perhaps, or wait to hear from the CEO, perhaps in that earnings call, but whether this move is actually justified in the realm of AI. And speaking of earnings, HP Enterprise is one of the big movers we're watching, falling after their revenue disappointment. Remember, they are very exposed to that business investment, down about 8% in the pre-market, trading about $14 a share. But again, all eyes on the earnings story for Salesforce, the ticker there, CRM, higher by about 1% already in the pre-market. So a little bit of optimism baked in those companies reporting after the bell today.
Yeah, absolutely. Lots of earnings stories then to look ahead to. And on the software side of things, spending has been a little depressed perhaps, but how much can they pivot the conversation to, you guessed it, AI? That seems to be the driver of expectations these days. So we'll see whether that happens at Salesforce, of course, under pressure from a number of activist investors there. That is it for Early Edition. Surveillance is up ahead. They'll be building, of course, towards some of those earnings stories that we just talked about. They'll also be talking about the debt ceiling and everything U.S. politics with Congressman Brian Steele, who'll be joining the team. That is a conversation coming up at 8 a.m. New York time. This is Bloomberg.
not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time? Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue. He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come. I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
He's
story.
there, the kind of upside.
The problem's going to be is when people realize, wait a minute, look at these inflation numbers, they're coming back up instead of going down.
Inflation's likely going to be higher than it was in the last cycle.
What you're hearing from Fed officials is very much in line with what the data are showing, which is they're starting to get a little frustrated.
We're still pricing the Fed cutting before anyone else, and that bit I don't understand.
If I were a forecaster still, I am pretty sure I will put in a small recession later this year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Closing out the month of May, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market just about negative on the S&P, negative 0.2%, but just monster outperformance year to date and over the last month on the NASDAQ 100 relative to pretty much everything else, Tom, including the equal weight S&P.
Still a story today, and I know it's led by NVIDIA, and we've all decided that we don't own NVIDIA, so that we had a lousy May, but the answer is it is about a NASDAQ that's outperformed, but the backdrop is fascinating when you look at the economics. Maria Tadeo talking about inflation in France coming in lower, Spain coming in lower, and the news from China today, John, is underreported against that NASDAQ boom.
PMIs last night dropped from China, manufacturing PMI deeply below 50 now. Unsettling for those who are looking for a big rebound in the economy off the back of reopening, and bang, the euro breaks lower. The euro now 106.76. Bramo, that's the one we've been watching, just this drip feed of negative information pushing back against this consensus view that this is where the growth would be. China, this is who would benefit. Europe, and things are starting to roll over.
And it's been so hard to understand the international impulse of some kind of China slowdown, given the fact that it's unclear how much was domestic and how much was internationally driven in terms of consumption. At this point, the big question for me, given the downside surprise after downside surprise in China, when do they start stimulus again? Do they?
Exactly.
And does it actually matter for global growth? Does that matter for international consumption, or does it continue to be a domestically driven game?
My reading of this, and Duncan Wrigley was absolutely fabulous with Ian Shepherdson and Pantheon on this morning, is, boy, Lisa, they got to act fast. This is not going to be something. I would look, John, frankly, Sunday evening, our time, 7 p.m., boom.
But this is why it's so hard to get conviction right now. And this is the reason why people are basically piling into a couple of AI names and continuing to stay defensive. I like what Mike Wilson said when he was on with you guys, saying basically this is a defensive market. Of course I did. What do you think I do?
Very cool.
Obviously. Everyone watches.
It's so sad. That is so sad, Brad.
Oh, thanks. Love you
sad?
Too. Glad to be back.
Isn't that sad?
What then?
Not just NVIDIA, though, by the way. Meta, AMD, Salesforce, Tesla. And just on Tesla, I read a fantastic piece yesterday.
Please.
Best thing I've read all year. It's all about Fidelity cutting the valuation of Twitter. But the last line of the story should have been the first line, because the last line of the story was this. Despite Twitter's issues, Musk's wealth is up more than $48 billion this year. So here we are throwing mud at Musk because he paid $44 billion for something that's worth nowhere near. And year to date, his wealth is up more than 50. Now, this is all like paper stuff. I get it. But it's so funny to me to see the last line of a story, which Lisa probably should have been the first line of the story.
It probably underscores the schadenfreude that people feel and the reason why everyone's rooting for things to, potentially go after him. Because if he were really getting kicked in the head, then perhaps people would be like, all right, maybe it's enough.
He's doing okay.
Exactly.
I think he's doing okay. Better than okay. Your equity market on the S&P 500, negative 0.2%, bit softer there. But this month, this year, I'll swear on the NASDAQ, we've been absolutely flying. In the bond market, yields come back down by 3 or 4 basis points, the 10-year 364. And there's the move in the euro, back down to a 106 handle. Tom, 106.72.
Oil, 68.19 on American oil, and it hasn't found a bottom yet. I mean, it's south. You're going to get a 67 print here at some point, and this is this global slowdown. I looked at London copper, the Bloomberg commodity indexes, all rose back to China, which has got to be the theme today.
Lisa, the PMI's coming in softer.
Yeah, and this is going to be a theme going forward in order to understand just how much disinflation really takes hold. We haven't mentioned the debt ceiling and the debt limit, which I'm very happy to hear about, frankly. It's probably part of the reason why I took time off. I figured nothing would get established. It has. The House is voting on that debt limit deal that they did strike. Very curious to see the breakdown and how much of a pushback there really is from the Freedom Caucus. Also, Ron DeSantis coming out really against this. How much does this really factor into the presidential election? Today, JOLTS data comes out at 10 a.m. I also came back for the Beige Book, which comes out at 2 p.m. Really curious to see job openings in particular. I want to know how much we continue to see some sort of deceleration there. And just in case you're worried, I also came back for the Fed Speak. It includes Boston Fed President Susan Collins, Fed Governor Michelle Bowman, Philly Fed President Patrick Harker, and Fed Governor Philip Jefferson. Very curious to see whether there's any cohesive. Yeah. God, just such kindness.
Waiting for that. Once that debt ceiling deal passes, Tom, you'll have tons of issues.
Yeah, Ira Jersey with a couple memos on this at Bloomberg Intelligence.
Hundreds of billions.
I didn't understand the memos, but there's a lot of money coming in short-term paper, and you see it in 3-month 10-year. Lisa, this is your world. The short paper versus the benchmark, 181 basis points, right down near that 191.
Who gets excited to come back for Fed Speak? Steve Chevron, head of US Multi-Asset Solutions at Federated Hermes, joins us right now. Steve, we talked about the outperformance of the NASDAQ, and good morning to you, sir. Any reason to believe that ends anytime soon?
No, I mean, I think you do have another sense of American exceptionalism that's taking hold. I think if there's been a surprise this year, I mean, AI, look, that was something that you can't say you necessarily knew it was coming in the way or as fast as it's come, but that's something that you can understand. But there's also been this flight to quality trade that's helped growth stocks. And we knew that happened in the pandemic because we were locked in our homes. And, I like to say it was so bad I even had to watch an episode of Bridgerton, which is the worst thing I've ever had to do.
Oh, but, come on. I like Bridgerton.
Honestly, I'm with him. Probably one of the worst things he'd ever have to do. I agree.
I totally disagree. And we can talk about that in a little bit, but carry on.
He looks like the guy in Succession.
Well, which one, Tom?
Carry on, Steve.
So on the other side of it, though, you had this scenario where under bank stress, companies with these fortress balance sheets got a bid again. And that, I think, has been a little bit of a surprise this year that's driven at least high-quality tech to being that defensive trade again. We understood why in the pandemic. I'd say we were probably a little surprised that they reasserted themselves as a defensive trade in the wake of the bank stress, but they have. And here we are again with American exceptionalism in the equity markets.
So here's really the conundrum that I feel in the angst of some of the notes that I've been getting. Could you end up with basically a range-bound S&P, but the conservative trade, the defensive trade, getting upended with some of those names rallying as big tech perhaps loses some steam? Basically, a lot of churn underneath the hood, just slamming everybody out of their positions.
Yeah, Lisa, let me start here by saying if you have super high conviction right now, you're not paying attention. This has been a very slow moving economy and market. I think what we believe is that we are headed towards slower growth. I think you're seeing that In Europe now, you're seeing that in China. It's the collective impact of rate hikes. It's inverted yield curves. It's negative LEIs. It's all of that. The question is it a continuation of this rolling recession rocky landing that we've been on that keeps you in this kind of range-bound environment, or does it break into a classic recession? I think that's still very much the open question, and we don't know the answer. And so the answer to your question depends on that. If it's this kind of rolling recession, then yeah, you could see kind of growth continue to lead the way. You could see bond yields kind of range-bound. Spreads don't really widen. The Fed doesn't cut all that much or anytime soon. And you're getting your 5% in cash and your growth stocks, and those are the only games in town. If it breaks into a classic recession, now all of a sudden bond yields fall. You've got a bond trade, credit spreads widen, which open you up to a kind of positive credit trade down the road, and you're probably going to see more broader pressure on the equity market. That's why we're watching these small banks and small businesses, because however that breaks is going to tell you which direction you're going in.
What's the message from commodities right now?
Well, commodities are telling you that global growth is slowing, and that I think if you look at what the commodity market's telling you, it's either meaningful disinflation on the horizon or outright recession risk. And if you look at some of the numbers coming out of China and out of Europe, I think you're starting to see those economies break towards that more classic recession. In the U.S., it's taking longer, and the economy has been more resilient. The 30-year fixed rate helps. There was more excess savings. There was more excess stimulus in the U.S. And so we may be headed on that path. That's not clear yet, but it certainly isn't happening as quickly as it is in the rest of the world.
Steve, and beyond that, the stock market is not the economy. There's a key line that you used, a key phrase, and I've been trying to drill into this over the last week, so I'm pleased you went there on your own. American exceptionalism in the equity market. Steve, we had a decade of that. Europe, the Euro Stoxx 50, didn't have the FANG names, and right now Europe doesn't have NVIDIA. Now, Steve, I just wonder, are we setting up for the same thing again, or is it still far too premature to tell?
Well, I think you are, at least over the medium to long term. And John, you know, if you really want to break down economic growth, it's two things in the long run. It's how many babies do you have or bring in, and how much can you innovate? And when you look at the U.S. demographically over the long run, you've got 10, 20, 30% working age population declines over the next 30, 40 years set for Europe and China and Japan. The U.S. doesn't have that. The U.S. has 9, 10% population growth projections in the working age cohort over the next 20, 30 years. And you're the center of innovation, right? Whether it's AI or robotics or the Internet of Things or blockchain, you name it. It's really starting with U.S. intellectual capital. So if you're taking a long-term bet on which economy is going to lead the world and which stock market is going to be rewarded for that, it's absolutely the United States. It is the only major economy that has the combination of robust working age population growth and that kind of transformative innovation. And I don't think that changes anytime soon.
Well, we're going back to the start of the conversation then. Equal weight S&P, market cap S&P, NASDAQ 100. Steve, if you had to own an index right now, what would it be?
Well, I think you're barbelling on the equity side. I think, you know, one, you want to own those defensive dividend-paying stocks. I think the idea that the economy is not going to slow in the face of 525 basis points of rate hikes and probably, you know, at least 25 basis points more to come at some point, I think that's a low probability bet. And those defensive dividend payers, the Dow Jones Select Dividend, if you will, I think is a good place to be. And then you got to pick some cyclical part. Markets rally on Fed pauses, even if a recession is to follow. Even if a recession is to follow. So then you ask yourself, well, what's that risk asset that you want to own? It's not cyclicals. It has been international for us. I'd like it to be growth going forward, but I'm not going to pay these multiples. So I think the story here is you buy growth on any meaningful pullback, you sell cyclicals on any meaningful rally, you don't chase.
Hey, Steve. Good to catch up. Steve Chevrone of Federated Hermes. Big line that, TK. You and I started that conversation last week. Is U.S. exceptionalism making a comeback?
Yeah.
With NVIDIA mounting higher?
Voya's leading the way on this, and there's others as well. There's a huge deal. I can't wait to see the mathematics of active versus passive June 30th.
Equities slightly negative. We're down 0.3% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The debt limit deal heads to a House vote today after squeaking through House Rules Committee by a 7-6 margin. The nonpartisan Congressional Budget Office estimates the deal would cut deficits by $1.5 trillion over a decade. Meanwhile, U.S. House Speaker Kevin McCarthy has dismissed threats from Republican hardliners to remove him from his job. Foreign ministers of the North Atlantic Treaty Organization countries began a 2-day meeting in Oslo while they discussed Ukraine's bid to join the military alliance, as well as how to boost defense spending. French President Emmanuel Macron will also speak. He's expected to emphasize the importance of NATO's role in Europe. The U.S. urged Serbia and Kosovo to immediately de-escalate tensions in northern Kosovo after clashes injured dozens of peacekeepers and protesters. U.S. Secretary of State Antony Blinken blamed Kosovo's Prime Minister Albin Kurti's government for, quote, unnecessarily inflaming ties with the minority Serb community. Blinken urged newly elected ethnic Albanian mayors to avoid working in predominantly Serb towns where violence erupted this week. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Was going to keep Ray World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. So far, the jobs report has not been good news for the Fed.
3.4% unemployment.
That's not the picture Jay Powell thought he'd be looking at.
It really signals an employment market that's chugging along
miles from where the chairman of the Fed wants to be.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
It hasn't been a widespread job loss.
Tightening has yet to show up.
Fed's not going to quit until the labor market quits.
The May Jobs Report, Friday on Bloomberg Television and Radio.
I'm not sure what in the bill people are concerned about. It is the largest savings of $2.1 trillion we've ever had. These are major victories. I understand people get upset about walking through a debt ceiling, but this is a House, a Senate, and a presidency.
We're going to make sure that the country does not default, but we also are going to make sure that Kevin McCarthy and my colleagues on the other side of the aisle, of course, uphold their end of the bargain, which is simply to produce a sufficient number of votes.
House Speaker Kevin McCarthy, House Minority Leader Hakeem Jeffries speaking on Bloomberg's Balance of Power just yesterday. Wall Street hoping we can just move on, and hopefully we can. We could have a vote a little bit later in the House as, Tom, things pass a key procedural hurdle yesterday evening.
We got to mention what you brought up last time, and I'm not read in on it. I'm sorry, but there's going to be a balloon and T-bill issuance at some point. I mean,
Once this passes,
there is a ramification of this silliness in Washington to our world.
Which will be hundreds of billions of dollars of T-bills. There are some people who think that would be totally okay. There are some people who think it can exacerbate existing tensions, which are in the banking sector, competing for capital with banks, Bramo. I can imagine you're thinking about the other side of the trade just a little bit more. But we had someone from Columbia Threadneedle, Ed Al-Husseini, sit on the other side of the table with us yesterday, Bramo, who thinks that this will be okay. We'll get through it, no big deal.
Most people do, which is the reason why the distortions haven't gotten exacerbated in the T-bill market. But if you think about the banking stress, you already have seen some of the biggest capital flight from the deposit accounts in 50 years. What will this do to that?
Yeah, and am I right that this Friday maybe is when the report comes out, we may see further deposit flight? Why wouldn't we? You know, I just wonder the flows are in place. It may
it's
not
something
be as
we're
large.
watching. I'm not going to make the call. Loretta Mester in the FT, I think, is worth a read. Cleveland Fed president
What's she
talking
say?
about making another move next month. She doesn't see the conditions here for a pause, looking for a hike in June. Still got payrolls on Friday, CPI the day before the next Fed meeting. We'll see what we get. We talked about Andrew Hollenhorst recently of Citi, who set the bar incredibly low, I think, for another move at the Federal Reserve. 200K on payrolls. He says 0.4% core month on month CPI. Gets it done for him, 25, still to come.
We'll give you the coverage on Friday. We go beneath the headline data at 8:30 in the morning. Right now, we speak expertise with Wendy Schiller, director of Taubman Center at Brown University, one of our most popular guests. We get huge response when Professor Schiller is on. Professor, there's that scene in the movie Lincoln, Daniel Day-Lewis and Sally Field, and Tommy Lee Jones steals it as Thaddeus Stevens. And there's all the drama of the Emancipation Proclamation and all that. Really, history repeats itself. It seems like that right now. Who's the Thaddeus Stevens right now in the Hill that's going to get this done?
Well, I mean, I think that the Democrats, essentially, Hakeem Jeffries, is going to have to deliver. And he keeps saying, oh, well, we're not going to, we need 150 Republican votes. We're going to hold off. But in the end of the day, the White House has a Democratic Party occupant. And you have to save the president, and you have to save the economy. So the Democrats, and basically led by Hakeem Jeffries, will have to step in if the revolt, quote unquote, that we're hearing about among Republicans grows much larger between now and the time of the vote today.
Mr. Manchin got a pipeline. He's over in the Senate. What are they going to give House liberals to get their vote?
Well, they're not going to need that many liberals. They're not going to need the most left wing of the caucus, progressive caucus. They may or may not sort of give them a pass and say, you know, you don't have to go down this road, because the most left wing will say, well, the most right wing is not voting for this bill. Why should we vote for the bill? So that's the defection concern, right? The snowball effect is if you give some people a pass not to vote for this bill, how many more people do you have to give a pass not to vote for this bill? And then does your majority collapse? I don't see that happening. I think there are enough confirmed Republicans, maybe not 150, but enough that Hakeem Jeffries will only have to get a certain percentage of his Democratic caucus. And those moderate Democrats, are not that many left, but the moderate Democrats are going to need to vote for this just to show that they're willing to do something to contain the federal deficit.
Wendy, what does a West Virginia natural gas pipeline and the accreditation of it have to do with fiscal responsibility?
Well, it's about the way that we do our budgeting. It's the fact that we have a Congress that is geographically apportioned and is bicameral, right? Think about that. You have very different incentives for senators versus House members, particularly smaller population, sort of larger geography states that have natural resources. I mean, this is the institutional structure that was created a long time ago. It doesn't quite fit. It doesn't really fit at all our major, huge federal budget and federal government. But we're stuck with it, and these are the kinds of trades you need to get things done. What I'm shocked at is as much policy is being made in the debt ceiling. I can go way back to Graham Rudman, and that was attached to the debt ceiling, but that was budgetary policy, and it made sort of sense then in the 80s. These are all sorts of policies, social welfare, energy, climate policy, attached to a debt ceiling bill. Is not the way you want to make policy for a government this large.
Which is the reason why Bloomberg Intelligence came out and basically said, yeah, it might reduce the deficit by a little bit of a rounding error, but longer term, it will slow growth by even more, and it doesn't actually address some of the real pressing fiscal potential concerns with respect to certain programs that are going to be unsustainable. What's your view on that? I mean, basically, is this lipstick on a pig?
Well, Lisa, I don't know if I go that far, but I think what most people have to understand is that at least 2/3 of the federal budget, which is probably going to push over $7 trillion, you know, we're at 6.5 now, that is entitlements or built-in spending, defense spending, programs that you cannot touch that are facing some insolvency concerns, Social Security, Medicare. Those programs are just, nobody touches them. Congress won't go near them. I mean, they're doing a few things to sort of trim the work requirements, in other words, make it a little bit stiffer to get some social welfare programs, but the big ticket ones are not being touched. And until those are touched, you know, the federal budget will continue on this growth trajectory, which means we're going to be spending more than we take in every year, and the debt will just keep growing, particularly if you cut the IRS, the Internal Revenue Service, which collects revenue, which helps balance out our federal spending.
Professor Schiller, you mentioned Graham Rudman. Just simply, Civics 101, why can't we get a commission done that has some strength to get to a good resolution?
Because I think the Republican Party has sort of strategically decided that being anti-federal government across the board is winning them votes and keeping their base roiled up, and that's partly federal spending. You have some states now with Republican governors that are saying we're not going to take federal money, we don't want the strings attached. So going way beyond unfunded mandates, they're now saying we just don't want the money and we're not going to do provide the services that the money would help us provide. So you're seeing a larger trend, a deeper trend in the Republican Party that is rejecting federal authority, and this is part of it. And so if you can cut spending, and that becomes a big ticket item, and you want credit for that, you want Congress to do that, you want to be in a room saying you have to cut spending because that gives them a talking point that's resonating quite well among their base at home.
Wendy, forgive me for asking for a time frame, but for how much longer do you think Speaker McCarthy is Speaker McCarthy?
Well, you know, Democrats have come out and said they're going to keep this guy afloat, right? They've already said if his own party rejects him, we will find the votes to keep him. Because, of course, the alternative could be significantly worse for the Democrats and for President Biden. So McCarthy looks like a guy, when push comes to shove, will get the most basic things done. And he seems to have grown into that role. And if he gets challenged, I see some Democrats, maybe those who are going to retire perhaps in 2024, but they're going to come to his rescue, which they've already said publicly.
Hardly a ringing endorsement for the modern Republican Party, is it? Kevin McCarthy needs the support of Democrats to remain Speaker McCarthy.
Well, that was the way Boehner was as well.
Yeah, right. But John, this is also, but Democrats should be aware, or independents should be aware, because these splits in the Republican Party are what we also saw, as you just mentioned, about John Boehner and Paul Ryan. And yet Donald Trump won with a big, huge surge of Republicans in 2016. So I don't think it tells you anything about the potential for the Republicans to unify behind their candidate in 2024.
Oh, absolutely. That's not what I was implying at all, just to be very clear. Wendy Schiller at Brown University. Wendy, thank you. I meant for Kevin McCarthy, it's hardly a ringing endorsement from the modern Republican Party for him. The fact that he needs to rely on Democrats to remain Speaker McCarthy.
I can't state how Ronald Reagan invented you run on the outside and move to the middle through the election. And that method is dead. It's just gone.
I'm not sure if pride has been a big concern of his. He basically, how many votes did it take?
Was it 15?
15. I mean,
Something
he's just
like
willing
that.
to take it. That's not exactly, he's not looking for a ringing endorsement.
Bill Leah Milken, up next.
we had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compaq merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Equities on the S&P 500, just a little lighter, softer, negative on the S&P this morning. Here's a picture of things for you. Down we go by 0.3% on the NASDAQ 100 on a 3-day winning streak. Could break that today. We're down just a little bit, slightly negative, down 0.3% there as well. Month to date, though, the NASDAQ 100 up by more than 8% this month. Up more than 8% with the equal weight S&P 500 down 3% this month. That's 13 points of outperformance. Month to date. It's kind of crazy. Even with this in the bond market as well. So let's look at bonds together. 2s, 10s, 30s. 2 year before today on the month, higher by 44 basis points. Trimming some of that down a couple of basis points to 442. But remarkable, Tom, to see those gains in the equity market, in the NASDAQ, in big cap tech, with those moves in the bond market at the same time.
Quickly, curve inversion. We had negative 80 basis points yesterday, still negative 78, substantial, as you say, John, over the month. We've seen a steeper, a re-inversion, not out to highs. Real yield 142, 10-year real yield. Maybe not all that much news-making, but I'm going to go to the 3-month 10-year. The T-bill, as compared, high-yield T-bill, as compared to the economic slowdown 10-year yield, 181 basis points. Is a wow statistic.
For a moment, this was boring, and then it got really, really interesting, particularly in the FX market. You had that lift in yields. You pushed that through foreign exchange. You got a stronger dollar. You got a weaker euro off the back of weaker China data. You got that again overnight. PMI's disappointing. Manufacturing a whole lot softer. Worldwide, actually, but led by what's developing in China relative to expectations for a big boom. The euro hasn't seen 108 for about a week now. Broke 107.
We'll see 105
in the last 24 hours. I'm with you, Tom. I'm with you. 106.75 right now.
What we're going to do is what we do best. We are committed to international economics. Remember the IMF coverage that we did here in the recent weeks, including speaking to the managing director. It was April 6th. Our Eric Martin was reporting on the bombshell 5-year view of 3% global growth. I'm still not used to that report from the IMF. Thank you, Eric, for that report. And then today, Duncan Wrigley at Pantheon, Ian Shepherdson's Pantheon. Wrigley has to root for Newcastle with all that. He comes out and just simply says China to export disinflation and deflation. I think we saw that banner when Alan Greenspan was running the show. William Lee joins us now, chief economist at Milken Institute. Billy, let's start with Greenspanian 101. Is China in their slowdown going to export disinflation and deflation?
Well, China can't export much of anything right now, but I hope what they do is disinflation for the rest of the world. Right now, China's recovery has really faltered. We can see that not only is manufacturing down, but it looks like the consumption is on its way going to go down as well, with unemployment rates at 20% for youth unemployment. So China's not in good shape right now, and I think we are looking around and seeing what is going to pull China out of the doldrums.
What is the degrees of freedom an autocracy has Sunday afternoon, New York time, when they're supposed to provide stimulus?
It's pretty limited, right? Because not only is the federal debt out of control, the municipal level debt is out of control. So the general channels for fiscal policy have been through the municipal governments to try to hire more people, build more projects and stuff like that. Well, right now, they can't do that. So the amount of fiscal policy that we have is really limited. And monetary policy, I mean, you can lower rates, but people are just going to, stay there and not borrow because they're going to ask themselves, where am I going to spend the money in order to make money in the future if the demand is so slow? So China right now is snowballing into a fairly bad static plateau.
Static plateau that's been priced in or not, Bill?
You know, I think one of the things that we have to look at is where is it being priced. One of the things we talked about at the Milken conference that just ended a month ago was that a lot of the investors going into China go into the private markets, and we really can't see a lot of that. But in order to get into the private markets, one thing that everyone made clear was they needed good Sherpas. They needed someone to guide them through to find good investment opportunities. And a lot of the investors claim they've got some good Sherpas there, and they're getting good bargains because the slowdown is affecting valuations both in the public and private markets. But the real question to ask is, will you get the kind of returns you're hoping for? And there I have my doubts because the demographics are working against them. And on top of that, the possibility of technological change, which would be the one thing that boosts the Chinese economy, is also not going to be there because policy has been really anti-innovation, anti-technology, and it's hard to see that changing.
Which is, John, what you were pointing to when you were taking a look at the tech indexes over in China versus the tech indexes in the U.S. and that huge bifurcation between the two. Bill, that's maybe on a domestic level. What about internationally? Has this been priced in terms of the impulse that China had on Europe? We were talking about the euro and how much it's come off some of its earlier highs.
Well, the renminbi right now is weaker than it's been for God knows how long. And so in that sense, it's being priced in. But for me, the FX market is very short term. The real question is, are investors pricing in growth opportunities over the next 5 years? Are they putting the marginal dollar into China or are they putting it somewhere else? And I think more often than not, they're looking somewhere else.
Bill, you've got a great ability to move away from the Pacific Rim in the three cities we focus on all the time. What's the rest of China look like with the unemployment rates that are being reported?
That's a great question. Up until now, I would have said the prospects for any kind of innovation, any kind of employment growth are going to come out west because the Milken study for the greatest performing cities in China landed on Chengdu as a small innovation hub. And we still stand by those numbers. But unfortunately, these numbers are getting dated. And right now, I'm not sure if even out west, the innovation hubs will be able to give the kind of employment that they hope for.
We've been here before. And the answer is Beijing always blinks and moves away from a totalitarian mindset, the autocracy of President Xi, and they move to some form of liberality and capitalism. You're saying that's not going to happen this time? See, he's pointing on radio. You can't see that. Professor Lee is. I got to duck because the chalk's coming in.
Tom, President Xi's blinking is going to involve maybe a slightly different wrinkle. He's going to rely on nationalism, perhaps, some militarism, some expansion of hubris into the rest of Asia, because after all, he wants Asia to be the currency area for the China and for the renminbi. So I think these are the kind of places we should look for any kind of resuscitation of Chinese nationalism, which is they're going to try to instill pride in the Chinese people without giving them jobs. And that's going to be a cute trick.
Well, what does that mean in terms of international business? And I say this as JP Morgan has their conference and plays nice, albeit in a brilliantly diplomatic, pro-American, but also pro-China kind of speech by Jamie Dimon. How much can you really see a decoupling or a willingness to exacerbate that on the Chinese side in light of the economic challenges?
Well, Lisa, we have a love fest by U.S. CEOs going back to Tim Cook and now Elon Musk. And Jamie Dimon is very slick in being able to say, I'm a true American. I really am a patriot. So when you vote for me, remember that, even though I'm asking you to come to China and support my people. And I think going forward, we're going to see more of that because the question is, the people who are in China have to maintain their business and really contain what they've gained. But the marginal dollar, the investors sitting here in the West thinking of going to China, what are they going to see? And I think they're going to see a lot of opportunities in ASEAN, in Korea, and in the Quad countries surrounding China, because that's where a lot of the innovative industries are moving to.
I want to end the conversation where we began, where you're talking about sort of a stagnant plateau. What is that stagnant plateau in China? What is that rate of growth that's going to be the new normal and going to drive demand for the luxury goods that have gotten bid up, for commodities that have surprised a lot of people to the downside this year?
Well, Lisa, the official number is a 5 handle for growth going forward, and I think you're going to see more likely a 3 handle than 5. So I think that's the kind of order of magnitude you're thinking of, because with population stagnant, any kind of massive productivity growth can't get them above 3.
For obvious reasons, Bill, market participants are going to be very interested in the next move on stimulus to get the PMI back above 50. As you know, that's not what the leader of the Chinese Communist Party is going to be focused on. They're going to be taking a multi-decade view. And Bill, I'm far more interested in the kind of fiscal moves that they make to stimulate more investment in certain parts of the economy that are going to be highly competitive with the United States and Europe, particularly as the US retrenches and refuses in some parts to do business with the Chinese government. Now, Bill, what are you focused on with regards to that?
Well, absolutely. In fact, if you look at where the Chinese are meeting and where they're not meeting with Defense Secretary Austin, so they don't want to talk military, because we know what they're going to do there. It is not very powerful for the U.S. But I think the place that they're meeting with is Gina Raimondo, that's the Commerce Secretary. They're hoping to leverage some action on the tariffs. They're hoping to leverage some action on cutting the semiconductor restrictions, and their information blackout is going to leverage what our investors actually see. They're going to shape the story for global investors to be so wonderful that that investors can't resist coming. But in order to do the due diligence, the required information to do the due diligence is something that's being restricted as we speak by the Chinese government. And going forward, I don't see that lifting.
That last point is so important, Bill. Clarity, transparency. How do I know what the unemployment rate actually is in China? Measuring it is hard enough, but when we hear youth unemployment, something like 20%, just how bad is it, Bill?
It is that bad or worse, and if it wasn't worse, we would hear more about informal data, but instead we see companies like Wind being wound down by the government. We see due diligence companies like Bain being queried by the officials. So I think the Chinese are making it very clear, we're going to feed you the information you need, but it's from us.
Bill Lee of Milken. Hey, Bill, good to catch up, as always. It has been a tough year for the equity market over in China. Take the Hang Seng China Enterprises Index, okay? That is down by more than 20% from the peak. So we are in a bear market for some parts of Chinese equities, in fact, many parts. And you compare that to the NASDAQ this year, that wasn't meant to be the way this played out in 2023, Tom. It was meant to be very, very different through the equity market.
Off the COVID boom, 6%, but to model down to 3%, and I go back again to April 6th and the IMF bombshell. And I don't think anybody believes the IMF bombshell, but nevertheless, a tendency towards 3% global growth affects China more than any other nation.
How do you create a valuation for some tech prowess if you're basically forcing tech companies to break up, to reduce certain aspects of their company? I mean, how do you innovate in that? If Alibaba has to spin off their cloud computing because of political reasons and then try to understand that, how do you invest in certain things? So to your point, John, how do you create consistency that allows for some of the investments to compete, and especially without stimulus?
There was a story that we put out in the last week or so that you could see some rate cuts, that you could see some fiscal stimulus, but targeted specifically at high-end manufacturing. And that's what I think I'm getting at here. When you see those headlines, if they do cross, that's not going to be about getting PMIs above 50 again. That's something much, much more strategic than that.
We'll talk about this. This is not going away. It's very important, the impact of this on America.
Angelo Zena of CFRA on NVIDIA and the year-to-date boom for that hot stock. That's next.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The debt limit deal heads to a House vote today after squeaking through the House Rules Committee by a 7-6 margin. Meanwhile, J.P. Morgan Chase Chief Executive Officer Jamie Dimon says he's optimistic about it.
So I wish that one day we get rid of the whole debt ceiling thing, but I understand when, it's a democracy, people have different opinions about what we should be doing, and it's just one tool for one party to, get the other party to the table. So I'm quite optimistic there, and I really do applaud the fact that they all sat down, spoke, got something done.
The nonpartisan Congressional Budget Office estimates the deal would cut deficits by $1.5 trillion over a decade. North Korea has confirmed that an effort to launch a military spy satellite into orbit failed earlier today. The official news agency reported a rocket crashed into the Yellow Sea after losing propulsion in the second stage of the ascent. Now, the launch initially prompted missile alerts in both Japan and South Korea. Pyongyang says it will attempt another launch soon. Goldman Sachs is said to be considering another round of job cuts as the deal-making business remains slow. Sources say the third round will affect less than 250 people and will include the firm's more senior employees. Earlier this year, it had eliminated about 3,200 positions, embarking on one of its biggest ever round of layoffs. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. We're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority. The top names at the Fed are on Bloomberg.
Right now, if you had to tip the scales, the next move is going to be an increase or a cut. It's pretty heavily weighted to the increase for me.
Nobody covers the Fed like Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
How many times AI was mentioned during the earnings season, but it was some astronomical amount, and everyone is latching onto it. I think we need to be very cautious going forward. I just think there's so many unanswered questions. I don't think you put all your eggs in the AI basket, but you have to have exposure knowing that it's going to be part of the future.
When you get a briefing from PR right before a call as a CEO, you know what the briefing sounds like right now, don't you? Just say these two letters repeatedly and watch the stock in the pre-market or after hours just go higher. That's what it feels like with NVIDIA and other names. What makes me laugh, though, beyond NVIDIA, it's names that you wouldn't typically associate with this kind of stuff, Bramo, that it's just like, yeah, we've been doing this for ages. For ages, we've been embracing AI.
Doesn't this feel like what happened with cryptocurrencies and just in
Yes.
general what we saw with respect to blockchain? Basically, you had furniture operators mentioning blockchain and their stocks would surge. I mean, it's basically NVIDIA coming out after hours. We've got more AI, and everyone's like, yay, good job.
Long Island iced tea, wasn't it that? They put blockchain on the name or something like that. The challenge back then was to try and draw a distinction between the frenzy, the things that were going too far, and the real innovation, the stuff that would still be with us today.
I will just say this. Last night, the kids were studying. And what they all do is they run their essays, their tests through a ChatGPT paradigm to see what grade they would get. And a lot of teachers are doing this now too. And then they get a grade, and then they know whether they have to work more or not. I'm just telling you, this is being weaved into the sort of daily existence of so many people.
Are grading them based on that too.
Well, that's what they're saying.
You're implying the teachers at home, this is how they're grading the work.
I have heard anecdotally this has happened. I mean, they are overworked, and if they've got a lot of students, they could just run it through ChatGPT and get a grade. Everyone, they could write the essays with ChatGPT, grade the essays with ChatGPT, and we could all just